Good morning, students. Welcome you all on the second lecture on Ind AS 16. Students, today we will complete this Ind AS 16, one of the most important standard in the asset side. Students, in the yesterday class, day before yesterday, I mean to say last class, we discussed what is meant by PPE, and we discussed that property, plant and equipment is a tangible item which is held for either of the three purposes: held for use in production or supply of goods and services, rental purposes, and administrative purposes. Okay, and which is expected to be used during more than one period, generally more than one accounting year, right? If it is within accounting year, then there is no use of getting it capitalized and then depreciate. Okay, so largely it has to be have a life of more than 1 year. And there was one exception to the PP item, which is investment property. If land and building is acquired for the purpose of rental, in that case, it will be an investment property, not a PPE, right? So this rental holds good for all other PPE except land and building, right? So this definition we discussed at length in the last class. Then we discussed the recognition criteria, and we understood that an item has to be recognized as a PPE if the future economic benefit is probable and cost can be measured reliably. And we discussed 2-3 examples with the help of layman language examples, like machinery which was purchased from China and government has banned the output of that machinery, right? So in that case, future economic benefit is not probable. You are not expecting that future economic benefit will come, and hence it will not be recognized as a PPE. And the second leg is cost can be measured reliably. So generally, you always aware about the cost because you are spending, right, to acquire the property, plant and equipment. So, but in theory, these two conditions are there. Future economic benefit is expected and cost can be measured reliably. And these two conditions holds good for recognition of every asset. Okay. We also talked about spare parts, standby equipment and servicing equipment. And we discussed that, if this spare parts, standby equipment and servicing equipment meet the recognition criteria as well as definition of PPE, then it will be classified as a PPE. Otherwise, these will be classified as inventory under Ind AS 2. Subsequent cost we discussed, friends, that subsequent cost in the form of major replacement, major overhauls, right? So this we discussed that subsequent cost in the form of major replacement, overhaul, inspection, etc., etc. If these costs will incur, okay, so these cost has to be capitalized, right? Why? Because these costs have a future economic life. These costs have a future economic benefit, which will arrive in more than 1 year, okay, which will accrue in more than 1 year. So friends, if subsequent cost is also going to be capitalized because it met the recognition condition that future economic benefit is probable and cost can be measured reliably. So if future economic benefit is there, cost is there, so such subsequent cost will be capitalized. Sir, whether the day-to-day servicing cost, yearly service of car, this is also going to be capitalized? Answer is no. आप कैपिटलाइज करोगे भी क्या? 1 साल के बाद फिर सर्विस करनी है. कैपिटलाइज करोगे 1 साल में डेप्रिशिएट कर दोगे, राइट? So standard says that the regular servicing, day-to-day servicing, small consumable, right? These are not going to be capitalized. Okay. Subsequent cost in the form of major replacement, major inspection, overhauls, these are going to be capitalized. Then question arises, sir, if it is going to be capitalized, like we understood with the help of the truck and engine example, if engine is going to be capitalized, sir, then in the books of accounts in a particular truck, there will be 2 engines. Friends, that is why standard has told you that if you are recognizing the subsequent cost, capitalizing the subsequent cost, you have to derecognize, decapitalize the old component. Sir, but we don't have old engine value. Then standard told you that please take the current price as an indicative price and discount it back to the date when you have purchased the truck along with the engine. Arrive at an engine value, depreciate it today, and arrive at a WDV and decapitalize, derecognize that WDV. Okay. Sir, in that case, what will the treatment of the WDV of the old component? It will go to your P&L, loss on replacement of engine. Okay. Sir, if we have sold out of that engine If we have sold some scrap of that old engine and we realize some money, then your loss will be reduced to that extent, to the amount which you are getting realized. Okay. So this is what we discussed, friends. And we did one example, illustration number 8, okay, which is machine and turbine. And we have also discussed one example of, aviation, where we discussed the major inspection example in my Excel file. Then we discussed that once you have established that this item is going to be recognized as a PPE, now the question comes, sir, at what value? Standard says that PP will always be initially measured at cost, right? And then what is the value? Purchase price plus import duty plus non-refundable taxes. If you are purchasing a machinery and the supplier is charging a GST on that machinery, but you can take a credit or refund of that GST, it is not part of your cost of machinery, right? But if that GST refund cannot be availed, if that GST is not creditable, in that case, it will be part of your cost of the asset, okay? So purchase price plus import duty plus non-refundable purchase taxes minus trade discount and rebates plus directly attributable cost plus initial dismantling estimated cost of decommissioning, dismantling and asset retirement obligation. Okay. Initial estimate of the cost of dismantling and removing the item and restoring. Okay. So friends, we discussed what is meant by directly attributable cost. Directly attributable costs are those costs which is directly related to the acquisition of that asset. If that asset would not have been acquired, the cost would not have been incurred. अगर installation क्यों होगी, अगर machine ही नहीं खरीदेंगे तो. The transportation would not occur if the machine would not have been purchased. Okay. Is that clear? So these are the example of directly attributable cost. What is not an example of directly attributable cost? Like you have invited Amitabh Bachchan to inaugurate your factory. You have invited Rajnikant to promote your product. You have given training to your staff for a different regional language. So like administrative and other general overhead costs, these are not part of directly attributable cost. Okay. So friends, then we understood that the PP has to be measured at cost. But what happens if the PP is acquired on a deferred payment basis, right? So you are buying a machinery and you are paying beyond the normal credit terms. And that is why this machine will cost you more in comparison to your competitor. Your competitor is paying within normal credit term, but you are paying on an extended credit term. So your competitor capitalize the machinery at 1 crore rupees because they are paying 1 crore. But you are paying 1 crore 20 lakh because you are paying after 1 year. So this 20 lakh is not a cost of machinery. This 20 lakh is a cost of borrowing, right? So in substance, you are paying for two. So from the supplier side, there are two performance obligation. What? One, sale of machinery. Second, lending facility. So friends, from supplier side, you remember two performance obligation, receipt of interest and sale of machinery. Likewise, from the buyer side, who is buying this machinery, who is buying PPE. So he is paying for machinery 1 crore and he is paying for 20 lakh as an interest cost. Why? Because he has availed a credit for that. Correct? So cost of an item of PP is a cash price equivalent at the recognition date. In case payment is deferred beyond normal credit term, the difference between cash price equivalent and total payment, whatever you are paying as a total payment versus what would be the cost if you would have paid today or in the normal credit terms, the difference will go to the interest cost. Okay. And this interest cost will be capitalized if that asset is a qualifying asset. Okay. So we did this illustration number 1 from ICAI study material also, friends. Okay. So friends, now we are discussing different form of purchase of asset, right? We understood that PP has to be measured at cost. Second, we understood that if PP is purchased on a deferred settlement terms, then how this PP is going to be measured. And we understood that PP in that case has to be measured at the cost which would have been there had this asset purchased on an immediate basis. Okay. So now we are going to discuss the concept of exchange of assets, barter transaction, exchange of assets, right? And I can see a lot of participants have joined so far. So good morning, everyone. Good morning, Abrakesh, Ayush, Tushar, Dhanya, Usha, Karthik, Mamta, Nisha, Ginny, Pooja, Poonam, Stephen. So good morning, everyone. And I hope you guys have also started interacted on that portal. I can see Pradeep. Zini has also access to the portal. Karthik is also there. Devraj is also there from Jammu. Okay, so good morning, everyone. So now I'm starting today's agenda, right? I am starting today's agenda. Friends, let me take you on Excel file where we have stopped yesterday. So let me take you after that. Yes. Just give me a minute. Okay. Yes. So friends, now we are going to discuss the concept of exchange of assets. Exchange of assets. What is meant by exchange of assets? So this is barter transaction. This is barter transaction, correct? Barter transaction. So friends, for example, I have a Maruti Swift car. Okay. So I went to my friend and I told that exchange the car. He has a Maruti Wagoner. I have a Maruti Swift. Okay. So he took my Maruti Swift. I took his Wagoner. So we both have the car, right? So I exchange car in exchange of a car. These both the cars have a similar price, same configuration. I have a, in Maruti Swift, I have a 1000cc engine. That Maruti Wagoner has also 1000cc engine, right? So the feature, the use, the nature of both the assets are same. We are just exchanging, right? Friends, in this exchange transaction, do you find any commercial substance? Do you find any commercial substance? Is there any commercial benefit to anyone by exchanging the same set of assets? I have to increase my sales. I have to increase my sales. And my friend is also required to increase his sales. So me and my friend in the same line of business, we are selling the goods to each other in barter transaction, not in cash, in barter transaction. He is paying me for the goods. He is returning my goods. So not in form of returning. So I am selling him, he is selling me. Okay. But whatever I am selling him my product, he is selling his product to me. And the products are same. Okay. So friend, standard says that in such cases, the commercial substance does not exist. The commercial substance does not exist. So first of all, in case of exchange of asset, there must be a commercial substance. Okay. So we will discuss this. So what is the exchange of asset? A PP can be acquired in exchange of a non-monetary asset or a combination of a monetary and non-monetary asset. I went to buy a plot. Okay. So either I have to pay money in exchange of the plot. So I bought a plot for 50 lakh rupees. I paid 50 lakh rupees to the seller. Second, I told seller that, my dear seller, I don't have 50 lakh rupees. What you can do in exchange of a plot, you can take my car. The value of the car is 10 lakh rupees and 40 lakh rupees I will pay you in cash. Okay. So this is a combination of monetary and non-monetary. Third, I told him that you can do one thing. So in exchange of plot, I have a flat, right? You can buy my flat. I can give you my flat and you can give me the plot. So this is 100% non-monetary exchange, right? So friends, a PP is acquired in exchange of monetary and non-monetary asset. Okay, in exchange of a non-monetary asset or a combination of monetary and non-monetary asset. What could be the example? What could be the example? For example, like I have told, a building is purchased in exchange of Mercedes car and 20 lakh rupees of cash. This is a combination of monetary and non-monetary asset. A building is purchased in exchange of an aircraft, non-monetary exchange, right? Any problem so far? Any problem? So in case of exchange of asset, what will be the value of the PP? In case of exchange of asset, what will be the value of acquired PPE? आप एक्सचेंज कर रहे हो एसेट्स को, तो जिस एसेट को आप खरीद के ला रहे हो, in exchange of asset, what will be the acquired value of the PPE? Standard says that if the transaction does not have commercial substance, if the transaction does not have the commercial substance, I have bought Maruti Wagoner in exchange of Maruti Swift. Friends, what will be the value of the Maruti Wagoner which I have acquired? क्या वैल्यू होनी चाहिए? What should be the value? क्या वैल्यू होनी चाहिए? मैंने मारुति वेगनार खरीदी एंड बदले में मैंने मारुति स्विफ्ट दे दी. What should be the value of Maruti Wagoner car?
Value of the Swift car.
Sorry?
The value of the Swift car.
Value of the asset given up?
Yeah.
Since this transaction does not have a commercial substance, so technically speaking, whatever is the value which you have paid, that will be the value of the asset acquired. होना भी यही चाहिए. When you are paying cash, okay? So what is the value of your PP? PP has to be measured at cost. What is the cost? Cost means whatever you are paying on the date of transaction. Okay. Today, you are paying Maruti Swift in lieu of acquiring Maruti Wagoner. So technically speaking, whatever is the value WDV of Maruti Swift in your books of accounts, that will become the WDV, or that will become the value of Maruti Wagoner car. Correct? That will become the value of Maruti Wagoner car. So in that case, if the transaction does not have commercial substance, if the transaction lacks commercial substance, in that case, standard says that if the transaction does not have a commercial substance, asset acquired has to be recorded at the WDV of the asset given up. Asset acquired has to be recorded at the WDV of the asset given up. Okay. For example, A Limited purchased Maruti Wagoner in exchange of Maruti Swift. The WDV of Maruti Swift in the books of A Limited is rupees 5 lakhs. What is the value of Maruti Wagoner, that is the PP acquired? Example. This is the example. Answer. This transaction lacks commercial substance, and hence the asset acquired should be recorded at WDV of asset given up. Okay, WDV of asset given up. Correct, sir? But in the example, like you have taken that you have purchased a plot in exchange of aircraft or building in exchange of aircraft. So where the different assets are there, it means the nature of the assets are different, the usage of the assets are different. So in that case, if the transaction has a commercial substance, right? If the transaction has a commercial substance, then asset acquired has to be recorded at fair value. अगर transaction का commercial substance है, you are buying a different asset, you are paying a different asset. Okay. So if the transaction has a commercial substance, then asset acquired has to be recorded at fair value. Sir, but what is the fair value? Fair value of the asset acquired or asset given up? So how this fair value is going to be computed? Standard says that fair value has to be taken as per the below hierarchy, as per the priorities, right? If you are aware that fair value of the asset given up and the fair value of the asset acquired, right? Both the fair values are there. Both the fair values are there. In that case, whichever fair value is more identifiable, whichever fair value is more identifiable. For example, you went to buy a car, or you want, let's say you want to buy a plot, okay, land. You are buying a land, and in return, you are giving your Mercedes car. So you went to the market and get the value of Mercedes car. Okay, आपने Mercedes car की value लगवा ली. आप plot बेचने गए. You went to buy a plot. Sorry, you went to acquire a plot, not sell a plot. You went to acquire a plot. आप plot खरीदने गए और अब बदले में अपनी कार दी आपने, right? You have given your car as a consideration in lieu of buying a plot. You have the fair value of the car, you have the fair value of the land, which is plot. Both the fair value you have. Tell me, which fair value is more identifiable fair value? कौन सी fair value more identifiable होगी? किसमें subjectivity कम होगी? The fair value of the property is more identifiable. Property is prone to sale and purchase, right? Property तो regular sale and purchase होती है, उसका एक market है, उसका एक property की stamp value होती है, correct? The property has a municipal value also. So if whenever you are buying an asset in exchange for another asset, and if both the fair values are there, you have to take a fair value which is more identifiable, okay? Fair value of the asset given up and fair value of the asset acquired. So you have to take the fair value whichever is more identifiable, okay? Is that clear? Sir, if both the fair value are identifiable, very clearly evident, I am buying a land and in return, I am giving my building. So both the fair values are identifiable and both the realistic also, both the fair values are. Standard says that in that case, what you are paying as a consideration, you are paying as a consideration building. Building you are paying as a consideration. Standard says that then record at the fair value of the asset given up. Okay. Sir, if both the fair value are not clearly identifiable, are you getting me? आपके पास आपको फेयर वैल्यू कौन से एसेट की लेनी है? अगर फेयर वैल्यू ऑफ द एसेट गिवन अप, फेयर वैल्यू ऑफ द एसेट एक्वायर्ड दोनों है, इन दैट केस you have to record at that fair value whichever is more identifiable. Okay. Sir, both the fair values are realistic. In that case, fair value of the asset given up. Okay, because that is your consideration which you are paying. Sir, both the fair values are not identifiable. Then fair value identifiable है ही नहीं. Then record the asset acquired at the WDV of the asset given up. At the WDV of the asset given up. Correct? Is that clear? So friends, if the transaction has a commercial substance, then fair value has to be taken as per below hierarchy. Fair value of the asset given up or fair value of the asset acquired. Whichever is more identifiable. Whichever is identifiable. Identifiable. कौन सी फेयर वैल्यू ले? जो फेयर वैल्यू आइडेंटिफिएबल है. सर, asset given up, fair value of asset acquired, both are identifiable. Then fair value of asset given up. सर, कोई भी फेयर वैल्यू नहीं है, इन दैट केस WDV of asset given up. Okay, WDV of asset given up, because this WDV must be there in the books of accounts. Correct? This WDV must be there in the books of accounts, right? Is that clear? So friends, let's discuss illustration number 2 from ICAI study material. Exchange of assets. Yes, Nisha, you have a question?
The example that you're giving us, for example, 1 and 2, the exchange of cars as well as the
Nisha, can you become little louder?
So there are two examples. One is the exchange of Maruti Swift and Wagoner, and the second example is the exchange of land for a horsing. So in both these, what I wanted to understand is, in one example, you told me that's a commercial subsidy, and one example, there's no commercial subsidy. What is the criteria of finding there is a commercial substance that transacting or not?
So Nisha, technically speaking, the criteria where you can evaluate that whether commercial substance exists or not, you need to see the risk, timing, and the nature of the asset should be different, right? So for example, if you are buying a car and you are selling a car in return of purchase of that car, right? The nature of the usage of that car, the risk, the risk and timing, the kind of usage, the kind of the money which you are generating, the benefit you are generating are same or similar, right? But you are buying a car and you are selling your flat, okay, your building. So both are having a different nature of risk and timing of cash flows, okay? The benefits, the usage, the cash flows which you will be generating from car are different from which you are generating from building. So this is the criteria, right? You have to see the risk, the nature of the asset, and the timing of the cash flows from that asset. If these three things are different, you can say that the transaction has a commercial substance, okay? Yes, let's discuss illustration number 2. Pluto Limited owns land and building which are carried in its balance sheet at an aggregate carrying amount of rupees $10 million. Not $10 million, rupees 10 million. Okay. The fair value of such asset is 15 million. So Pluto Limited owns land and building. So this is the asset, land and building, which is there in the books of Pluto Limited, which are carried in its balance sheet, means WDV दी है. So the WDV is given at an aggregate carrying amount of rupees 10 million. 10 million is a WDV of land and building. The fair value of such asset, fair value is also given 15 million. It exchanges the land and building for a private jet. It acquires a private jet. Fair value of the asset acquired. It acquires a private jet which has a fair value of 20 million. So the fair value of the jet is given. The fair value of the asset acquired is given. Fair value of asset given up is given. Okay. So this company is acquiring private jet. In consideration, this company is paying land and building and pays additional rupees 3 million in cash. So this is a combination of monetary and non-monetary asset. This company is paying 3 million in cash and this company is paying its land and building in return of buying this private jet. So what is the value of this private jet? Tell me. In this case, fair value of asset acquired is given. What is the fair value of asset acquired? Friends, can you respond on that portal? Fair value of asset acquired is 20 lakhs. Fair value of asset acquired is 20 lakhs, right? What is the fair value of the asset given up? Fair value of asset given up is 15 million plus 3 million cash, right? So 15 million is the fair value of the asset given up plus 3 million cash. Okay. Fair value of asset acquired is 20 million. So if both the fair values are given, fair value of asset acquired and fair value of the asset given up, in that case, which fair value you will take? अगर दोनों fair value दी है, तो which fair value you will take? Ind 16 says that if both the fair value are given, you have to take the fair value of the asset given up. Fair value of the asset given up. So the fair value of the asset given up is 15 million plus 3 million you are paying in cash. So the total value of the asset acquired is 18 million. Okay. So provided that the transaction is commercial substance, the entity should recognize the private jet at a cost of 18 million, its fair value, right? And should recognize a profit on disposal of the land and building of rupees 5 million. So what is my recognition of fair value of asset acquired? 15,000 is the 15 million is the value of the asset given up. 3 million is the value of the asset, value of cash. Okay, 18 million. And what is the WDV? What is the WDV in the books of accounts? What is the WDV of land and building? It is 10 million. What is my cash paid? It is 3 million. So 5 million is my profit on exchange of assets. Have you understood this accounting entry, or should I pass this accounting entry for you? Have you understood this accounting entry? When you acquired a private jet, you have to debit private jet PP account debit 18 million. 2. Land and building PP at WDV 10 million. 2. Cash 3 million. 2. Profit on exchange 5 million. This is the accounting entry. Friends, in the exam, if the question is silent, you have to assume that the transaction has a commercial substance. But if the question will tell you that, if the question will say that, if it is a similar asset, and question will say that the nature of the asset, the timing of the cash flow, and the risk associated with the assets, both the assets are same. In that case, you have to understand that the transaction does not have a commercial substance. In that case, you should not go with the fair value. You should go with the WDV of the asset given up. Okay. Is that clear? But if question is silent, then you have to assume that the transaction has a commercial substance. In 99.99% cases, the transaction should have a commercial substance, and the transaction has a commercial substance. The standard has given this criteria because, you know, in the real world, people started manipulating for their ulterior motives, right? That is why standard has given this line that if the transaction does not have a commercial substance, in that case, you are not required to restate your assets. You are not required to recognize your asset acquired at a fair value, right? ये concept उस लिए था. But from the examination perspective, 99.99% the transaction has a commercial substance. Your next step is you have to identify whether fair value of the asset acquired and fair value of the asset given up both are given. If answer is no, both are not given. Okay, then if both the values are not given, then you have to check what is the WDV of the asset given up. Okay, so जो asset आप surrender कर रहे हो, so if the WDV of the asset surrender is given, so the asset of new, the value of the new asset is equal to the WDV of the asset surrender. Okay, if both the fair values are given, then fair value of the asset surrender becomes the cost of the new asset. Okay, if only a single asset fair value is given, for example, fair value of asset acquired is given, but fair value of asset surrender is not given. In that case, the new asset is equal to the fair value of the new asset. Okay, the cost of the new asset is equal to the fair value of the new asset. I hope it is clear to everyone. I hope it is clear to everyone, friends. Is that clear? Yes. So whenever you are buying a new asset, technically speaking, you are selling your old asset. Okay. So on old asset, whatever capital gain under income tax will be there, it will be attracted. Okay. Is that clear to everyone? Can you please confirm on that portal? Abarkesh, Karthik, Hemant, everyone is saying yes, sir, clear. Okay, right. So we discussed this second example also, this second illustration, exchange of assets. Okay. Friends, so we have covered initial measurement. We have covered initial measurement. Measurement on the transaction date. We have covered measurement at transaction date, initial measurement. Now what happens on the reporting date, subsequent measurement? What happens on the subsequent measurement, right? Friends, as far as subsequent measurement is concerned, what are the two models in case of subsequent measurement? Have you heard about subsequent measurement? It was there in AS10 also. It was there in AS10 also. This subsequent measurement means measurement subsequent to initial recognition. Measurement subsequent to initial recognition. Okay. So you have bought the asset on, let's say, in September 2023. Now you have reached to March 2024 when you are closing your books of accounts. When you are closing your books of accounts. Okay. When you are closing your books of accounts. So friends, when you are closing your books of accounts, the question arises at what value the asset is going to be, at what value the asset is going to be remeasured or recorded or continued. So in that case, what happened? There are two models on the reporting date. You have to remeasure your asset at a cost model or revaluation model. At a cost model or revaluation model. There are two models, cost model, revaluation model. Okay. Now, sir, what are these two cost model and revaluation model? While we are already aware about these two models, cost model and revaluation model. But let me take you on the Excel file and then explain these two models. This is important, right? Then explain these two models. I hope my Excel file is visible to all of you, friends. Is that visible? Okay. So we are talking about measurement subsequent to initial recognition. Measurement subsequent to initial recognition. Yes, Ginny, just give me a minute. Initial recognition. This is known as a subsequent measurement. Subsequent measurement. And technically speaking, this subsequent measurement is measurement at reporting date. Reporting date. Yes, Ginny.
Sir, I have sent one query on the WAS portal. Will you please consider it?
So what is your query?
Sir, actually, you have tell us the when both the asset value are given, then whichever is more identifiable, we have to consider. Please explain it once again with the example.
So Ginny, what happened? So there are three situations.
Yes,
Number
sir.
one, first situation, when you go to acquire an asset in the market, right? So when you are acquiring an asset, you are exchanging your old asset with the new asset acquired. Okay.
Yes, sir.
So what happened? First situation could be you don't have the fair value of either asset acquired nor asset given up. Okay.
Yes, sir.
आपके पास दोनों की fair value नहीं है. In that case, standard is very clear. Standard says that please recognize new asset at a value of at a WDV of the asset surrender. Okay.
Yes.
Because you have that value in the books of accounts. Number two, standard says that if both the fair values are given, right? In that case, you have to take the cost of the new asset or value of the new asset is equal to the fair value of the asset surrender, the fair value of the asset given up, right?
Yes, sir.
Number three, standard says that if both the fair values are not given, in that case, you have to take the fair value, you have to take your cost of the new asset or value of the new asset is equal to the fair value of the asset, whichever is more identifiable, right? For example, in your question, the fair value of only a single asset will be given. Fair value of only a single asset will be given, right? सिर्फ फेयर वैल्यू ऑफ एसेट अक्वायर्ड दिया हुआ है, फेयर वैल्यू ऑफ एसेट अक्वायर्ड इज देयर, बट फेयर वैल्यू ऑफ एसेट सरेंडर इज नॉट देयर. जबकि रूल तो ये है, अगर दोनों फेयर वैल्यू है तो यू हैव टू गिव मोर वेटेज टू द फेयर वैल्यू ऑफ द एसेट गिवन अप, राइट? बट अगर आपके पास दो में से एक ही एसेट की फेयर वैल्यू है, सो विच एवर इज आइडेंटिफिएबल यू हैव टू टेक दैट फेयर वैल्यू. बट अगर क्वेश्चन में दोनों फेयर वैल्यू है और क्वेश्चन ने बोल दिया आपको, क्वेश्चन में ये बोल दिया कि देयर आर लॉट ऑफ सब्जेक्टिविटी इन्वॉल्व्ड in the fair value of the asset given up, while the fair value is, let's say, 25 million, but lot of subjectivities are involved in that fair value. Okay. And the market value of the asset acquired, which is clearly evident, is let's say 18 million, for example.
Yes.
So in that case, the question will give you a guidance that while both the fair values are given and one fair value is having lot of subjectivity, it is not clearly identifiable. अगर क्वेश्चन आपको कंफ्यूज करने के लिए दोनों फेयर वैल्यू दे और लिख कर दे दे कि एक फेयर वैल्यू ज्यादा एविडेंट नहीं है, ज्यादा क्लियर नहीं है, कॉम्प्लेक्सिटी है उस फेयर वैल्यू के अंदर, इन दैट केस द रूल इज what whichever is identifiable you need to take. So in that case, whichever is identifiable, आपका जो दूसरा फेयर वैल्यू है that is more identifiable, you have to take that fair value.
Yes sir, understood. Actually
So
वो
basically,
identifiable में थोड़ा मैं कंफ्यूज हो गई.
so Ginny, क्या होता है basically what happened, the rule is if both the fair values are given, you have
Yes.
to take the fair value of the asset surrender, which
Yes.
because that is what you are paying to buying a new asset. Okay.
Yes sir.
But if question has given you both the fair value and question has told you that even the fair value of the asset surrender is not clear.
Yes sir.
क्वेश्चन ने फेयर वैल्यू तो दे दिया बट वो खुद ही बोल दिया क्लियर नहीं है. एट दैट पॉइंट ऑफ टाइम यू हैव टू अप्लाई योर माइंड. ओके, मेरे को तो रिकॉर्ड करना है फेयर वैल्यू पे, बट ये फेयर वैल्यू क्लियर नहीं है, इसका मतलब जो ज्यादा क्लियर है उस फेयर वैल्यू पे रिकॉर्ड करूं.
फेयर वैल्यू पे क्लियर.
इज दैट क्लियर?
यस सर.
राइट.
थैंक यू सर.
सो इस तरह के क्वेश्चन आते हैं जब व्हेन द पेपर विल टफ. ओके, अदरवाइज तो बड़ा सिंपल आएगा, दोनों फेयर वैल्यू दी होंगी, बोथ द फेयर वैल्यूज वर गिवन, राइट. इन दैट केस द स्टूडेंट्स आर टेकिंग जस्ट वन फेयर वैल्यू विच इज फेयर वैल्यू ऑफ एसेट गिवन अप, और the question will give you only one fair value. Again, it is very simple, take that fair value. Yes. Or the question will not give you any fair value. Again, very simple, new asset is equal to WDV of old asset, right?
Yes sir.
But when the question will tough, he will give you both the fair value and he will give you guidance also that one fair value is not a real value, not a clear value. In that case, you have to apply your mind and you have to say that the concept says that we need to take a fair value of the asset whichever is more clearly identifiable, and in this case it seems that, right, so whichever fair value is more identifiable, you have to write that. In this case, it seems that fair value of asset acquired seems to be more identifiable, it is more clear, and hence we are taking the cost of new asset is equal to fair value of the new asset acquired, right? So you have to write in this way.
Thank you sir.
Okay, so let's go to the Excel file, and we were discussing subsequent measurement. Okay, we were discussing subsequent measurement means measurement at reporting date. So we have two models, my dear friends, and all of us are aware about those two models. So measurement subsequent to initial recognition. Initial recognition means recognition at transaction date. Subsequent to initial recognition means recognition after transaction date. So let me write this. Subsequent to initial recognition means recognition after transaction date, that is at the reporting date. Friends, at the reporting date, I have to arrive at the WDV or carrying value of the asset in my books of accounts. What is my carrying value of the asset in the books of accounts? For example, the company has purchased a car on 1st October 2023. Right now, the reporting date has come. The company has purchased the car at 10 lakh rupees. The life of the car is 10 years. What is the carrying value in the books of the company? What is the carrying value of the car? क्या करेंगे? कुछ करेंगे reporting date पे? Do we need to do anything on the reporting date? One of the students is saying, yes, sir, we have to charge depreciation. Very good. So we have to arrive at a carrying value on the reporting date. For arriving at a carrying value, we have to deduct depreciation from the gross block, from the cost, right? And that will be your carrying value. Correct? Ritika is saying, sir, we have to do the impairment testing also. Great, Ritika. So yes, if there is any impairment loss, you have to reduce your impairment loss also. So cost minus accumulated depreciation minus accumulated impairment losses. This will become your carrying value of the car. Very good. So when we arrive at the reporting date, we have to calculate the carrying value of the PPE, carrying value of the asset, right? So for calculating or arriving at the carrying value of the asset, for calculating or arriving at the carrying value of the asset, the standard has given you two models. The standard has given you two models. Model number one, cost model. Model number two, fair value model, revaluation model. So model one tells you that, okay, whatever the gross block is there, the cost is there, compute the depreciation, check the impairment loss, reduce it from cost. This will become your carrying value. The revaluation model says that not to worry, measure this asset at fair value, get the market value, get the valuation done. Whatever is the fair value on the reporting date, whatever is the market value on the reporting date, that will be your value, that will be your carrying value on the reporting date, right? For example, I have purchased a building for rupees 1 crore. The life of the building is 20 years. Okay. And I purchased this building on 1st April 2023. Now I reach to 31st March 2024 when I'm closing my books of accounts, when I'm preparing my balance sheet. 1 crore is the cost, 20 years is the life. What is my per annum depreciation? 5 lakh rupees. Okay. So on 31st March 2024, what is the carrying value of my building? What is the carrying value of my building? The carrying value of my building is 1 crore minus 5 lakh. 95 lakh is the carrying value of my building. Okay. So applying the cost model, what I have done, I took cost price, I took the cost minus, I reduced the accumulated depreciation in the cost, and I arrived at my carrying value. Option number two, I go to the market and I get the valuation done for that building. The fair value, the market value of the building is 1 crore 5 lakh rupees. 1 crore 5 lakh rupees. And this value is as of today, as on the reporting date. This is the fair value on the reporting date. 1 crore 5 lakh rupees. So I have opted for revaluation model. I have opted for fair value model, and I have remeasured my building at 1 crore 5 lakh rupees. I recorded my building at 1 crore 5 lakh rupees. And there is a revaluation surplus. Okay. कॉस्ट मॉडल से मैंने बिल्डिंग की फेयर वैल्यू, कॉस्ट मॉडल से मैंने बिल्डिंग की वैल्यू निकाली. सो कॉस्ट मॉडल का मतलब वॉट एवर कॉस्ट इज देयर, योर ओरिजिनल कॉस्ट, you have to reduce your depreciation and impairment losses, right? Fair value means fair value on the reporting date after doing all depreciation, everything. आज की fair value क्या है? Correct? So these are the two models, these are the two options which are there in Ind AS 16. The same options are there in Ind AS 38 also. Okay. Is that clear? Shall I start discussing more concept on cost model and fair value? Yes. Basic is clear. Have you understood the cost model and fair value model, which is also known as a revaluation model? Whether the basic is clear to everyone? Can you please confirm? So 2-3 students have confirmed. Okay. So let me discuss more concepts and prepare notes for you guys. Okay. So on this Excel file, friends, cost model and revaluation model. Okay. So on the left side, let me write cost model. On the right side, let me write revaluation model. So this is the cost model. This is my revaluation model. Revaluation. This is my cost model. This is my revaluation model. So PP has to be stated at either cost model or revaluation model on the reporting date. on the subsequent measurement, right? At the time of subsequent measurement, PPE has to be stated either at cost model or revaluation model. Okay, either at cost model or revaluation model. What is meant by the cost model? The PPE is carried at original cost. The PPE is carried at the PPE. The PPE is carried at original cost. Means your gross block will always be same. Your gross block. When I'm talking about original cost, I'm talking about the gross block. Your gross block will always be the same. Okay. In this case, your carrying value is equal to cost minus accumulated depreciation minus accumulated impairment losses okay, minus accumulated impairment losses, right? For example, original cost of an asset is 1 lakh, useful life is 10 years, okay, and impairment loss at the end of second year is rupees 5,000. Original cost is equal to 1 lakh. Useful life is equal to 5 years. Impairment loss at the end of second year is rupees 5,000. Compute carrying value at the end of first and second year if the company has opted for cost model. Compute the carrying value of PPE in case the company has opted for cost model. Compute carrying value PP in case the company has opted for cost model, right? So what is my cost? What is my cost, friends? What is my cost? My cost is 1 lakh rupees. 1, 2, 3, 4, 5. My cost is 1 lakh rupees. What is my accumulated depreciation? This is the first year. What is my depreciation? What is my accumulated depreciation? This is the first year only. My depreciation is how much? Yes. 1 lakh divided by 5. It comes at 20,000 rupees. If the life is 5 years, what is my depreciation for first year? My depreciation for first year. What is my depreciation for first year? My useful life is 5 years. My depreciation is 1 lakh divided by 5. 20,000 is my depreciation for the first year. Yes. What is my impairment loss in the first year? Impairment loss. Is there any impairment loss in the first year? Answer is no. Zero impairment loss. There is no impairment loss in the first year. Okay. No impairment loss in the first year. Okay. So what is my WDV? What is my carrying value? What is my carrying value? Carrying value at the end of first year. Carrying value at the end of first year. This is my carrying value at the end of the first year, right? Carrying value at the end of the first year. Okay. What is my carrying value at the end of the second year? Now this carrying value will become the opening value, correct? Less depreciation for second year. Less depreciation for second year. Correct? Depreciation for second year. So what is my depreciation for second year? So here my remaining life, remaining life. What was my remaining life here? Here my remaining life was 5 years. Now it is 4 years. So again, whatever is my WDV, I will divide 80,000 is my WDV, right? Divide by remaining life. 20,000 is my depreciation, correct? 20,000 is my depreciation. Is that clear? This calculation is okay to all of you. आपका जो भी WDV होगा उसको आप रिमेनिंग लाइफ में करते हो, रिमेनिंग यूजफुल लाइफ में डेप्रिशिएट करते हो, करेक्ट? लेस impairment loss. Your impairment loss is also given. What is the impairment loss? It is given in the question, 5,000 rupees. What is my carrying value? What is my carrying value at the end of the second year? My carrying value at the end of second year. At the end of second year. What is my carrying value at the end of second year? My carrying value at the end of second year is 55,000 rupees. Okay. What is the remaining useful life at this point of time? The remaining useful life is 3 years. What is my depreciation for third year? Tell me, what is my depreciation for third year? Assuming there is no impairment loss. What is my depreciation for third year? Now you have to depreciate this 55,000 over a period of 3 years. भाई जो बचा है उसी को तो 3 साल में करेंगे ना depreciate, right? So this will be my carrying value at the end of third year. Carrying value at the end of third year. Now, how much life is remaining at the end of third year? 2 years. Depreciation for fourth year. Less. Depreciation for fourth year. Less impairment loss. What is my depreciation for fourth year? Opening value divide by, or WDV divide by the remaining life. While it will be same because there is no impairment loss in this year, right? So what is my carrying value at the end of the fourth year? My carrying value at the end of the fourth year is 18,333. Fourth year. Now the remaining life is only 1 year. What is my depreciation for fifth year and my carrying value at the end of the fifth year? My depreciation for fifth year is opening value divided by remaining life. Okay. 18,333. 18,333. Okay. And my impairment loss is 0. Okay. What is my closing WDV? My carrying value at the end of the fifth year, it should be 0. So this cost model is pretty simple, right? Have you understood this cost model? This is pretty simple cost model. Simple है cost model तो yes. Simple है ना, calculation समझ में आ गई? These calculations are very, very important, my dear students. Normally student will make a error or mistake in an exam, right? क्या mistake होती है? So what happens? Students always used to divide while computing depreciation. Always used to divide the original cost divide by the original life, right? And student got stuck when there is an impairment loss in between the life of the asset. You have seen, if this impairment loss would not have been there, doesn't matter. If you will divide 1 lakh divided by 5 or WDV divided by the remaining life, the answer would be same, 20,000 every year. But just because in the second year there was an impairment loss of 5,000, your subsequent depreciation has been changed. Your subsequent depreciation has been changed. You can see in the first year and second year, the depreciation was 20,000 per annum. But in third, fourth and fifth year, the depreciation become 18,333. Why? Because there was an impairment loss at the end of the second year. So my dear students, always apply a rule. Whenever you have to compute the depreciation, you have to compute the depreciation on the opening value divided by the remaining useful life, right? So whatever, if you have to compute the depreciation for the second year, whatever is the WDV at the end of the first year, that WDV become the opening value of the second year. So you have to divide that opening value, divide by the remaining useful life, remaining, okay? So it will give you the depreciation charge for that particular year. Have you understood this? Many students make a mistake, okay? Why? Because they are not applying this concept. Because this depreciation calculation is always prospective. आपका जो भी WDV है, that WDV is required to be depreciated over the remaining useful life. Okay? Is that clear? Yes. So friends, this is the cost model. This is the cost model. How you compute, how you arrive at your PPE. How you arrive at a PPE carrying value. Okay. PPE carrying value. Is that clear? Is that clear, my dear friends? Friends, now let's talk about the revaluation model. What is my revaluation model? In revaluation model, like in this case, the PP is carried at original cost. In this case, in the revaluation model, the PP is carried at fair value. At fair, right? What is the definition of the carrying value? The carrying value definition in case of PPE at revaluation model is carrying value is equal to revalued amount, fair value, revalued amount minus subsequent accumulated depreciation minus subsequent impairment losses minus subsequent impairment losses. Okay, minus subsequent impairment losses. What does it mean? So let's discuss with the help of an example. Original cost is 1 lakh, life is 5 years, and the company has revalued its PP. Okay, so let's say original cost is 1 lakh, useful life is 5 years. Okay, now the company has revalued this PPE at the end of second year. At the end of second year, the company has revalued its PP at the end of second year at rupees how much? At rupees 90,000. Okay, at rupees 90,000. Compute the carrying value. Compute the carrying value of PP in case the company has opted for which model? Revaluation model. Okay, revaluation model. So again, the same aspect. Cost is in the first year, the cost is 1 lakh rupees. The cost will always be the same, 1 lakh rupees. Depreciation for first year is 20,000, right? This divided by remaining life, 5 years. There is no impairment loss. This is the carrying value. And at the end of the first year, there is no revaluation. There is no revaluation at the end of the first year. The company has changed the policy at the end of the second year. The company has done the revaluation. Okay. The company has done the revaluation. Now, depreciation for second year and impairment loss. Okay. So what is my depreciation for second year? This divided by 4. There is no impairment loss in this question. There is no impairment loss, right? Or let's say, just for the sake of similarity, let me put impairment loss also in this question. So let me put impairment loss, But this question will technically get wrong when I put impairment loss here. So I will put impairment loss at the end of third year. Okay. Impairment loss at the end of third year. Third year is 5,000. Okay. So I'll make this question more complex. So friends, on the second year, at the end of second year, there is no impairment loss. Okay. So I have arrived at, by just using this cost model, I have arrived at what? I have arrived at my WDV, my carrying value. What is my carrying value? This plus this. 60,000 is my carrying value. But and at the end of the second year, so in this case, the company has opted for revaluation model. The company has opted for revaluation model. So what is my revalued amount? My revalued, this is my carrying value. This is my carrying value by applying the cost model. Carrying value at the end of second year. But what is my revalued amount? What is my revalued amount at the end of second year? End of second year. What is my revalued amount, my dear friends? It is 90,000. It is 90,000. My revalued amount is 90,000. So what to do? What to do? This revalued amount, because you have opted for revaluation model, your carrying value is 60,000, but you have to record it at revalued amount, right? So friends, in this case, the difference 30,000, where this difference will go? Where this difference will go? At the end of the second year, you have to pass an accounting entry. What accounting entry you will pass? PPE account debit, PPE account debit to revaluation surplus, okay. Credit, revaluation surplus credit. By what amount? 90,000 minus 60,000, 30,000. Friends, you can see my cost was 1 lakh. My accumulated depreciation for 2 years was 40,000, right? My WDV, if I would have opted for cost model, my carrying value, my WDV was 60,000. But since I have opted for revaluation model, so my fair value will replace my net block. My fair value will replace my net block, right? So my new value will become 90,000 now. My new value will become 90,000 now, right? So friends, my carrying value at the end of second year, now my carrying value at the end of second year will become will become 90,000. Will become 90,000. What is the remaining life? What is the remaining life now? 3 years. Okay. So friends, again, what is my depreciation for third year? What is my depreciation for third year? Please tell me. Help me. What is my depreciation for third year? My depreciation for third year is this divided by this. 30,000. Friends, I do have impairment loss also in this question. Impairment loss in the third year is given at what value? It is given at what value? It is given at 5,000 rupees. It is given at 5,000 rupees. Okay. So you can see what is my carrying value at the end of third year, right? It becomes revalued amount. What is my revalued amount? My revalued amount is 90,000 minus subsequent accumulated depreciation. What is my subsequent depreciation? 30,000 minus subsequent impairment loss 5,000. So what is my carrying value at the end of the third year? My carrying value at the end of the third year will be, my carrying value at the end of the third year will be this one. The remaining life is now 2 years. What is my carrying value at the end of the fourth year? What is my carrying value at the end of the fourth year? What is my carrying value? This divided by this. Okay. 0. And now my carrying value at the end of fourth year is 27,500. My remaining life is 1 year only. What is my depreciation for the fifth year? Impairment loss and carrying value. What is that? Simple. This divided by remaining life 1 is 0. And this is this plus this. Okay. Is that clear, friends? I hope it is clear with the help of this example. It is clear. So whenever there is a revaluation model, if the company is opting, the difference will go to the revaluation surplus. That is number one. Number two, always your depreciation, subsequent depreciation will always be on the revalued amount divided by the remaining life. Okay. So that is why the formula for carrying value is revalued amount, because at the end of second year, now this 90,000 will replace your net block of 60,000. Now your asset gross block become 90,000, right? So the life will start from end of the second year. आपका net block जो 60,000 था वो 90,000 बन गया. अब now 90,000 will become gross block, zero accumulated depreciation, zero impairment. When you reach to the third year, end of the third year, okay, so in that case 90,000 divided by remaining life, which is 3 years. Okay, so revalued amount minus subsequent accumulated depreciation minus subsequent impairment losses. Students, do you have any question? I have seen Ayush has raised the hands. Ayush has raised his hand. Student, do you have any question? Ayush is writing, why are we charging depreciation when we know that machinery is revalued upward? Ayush, just to show you the difference. Okay. In this question, when we arrive at the second year, when we arrive at the second year and when we get the fair valuation done, we were able to know that the value is 90,000. Okay. So just to show you कि 90,000 का difference कितना है, right? And what will go to revaluation surplus? That's what I want to show you. And that is why I have computed depreciation in the second year. But Ayush, in third year and fourth year and fifth year, since no fair valuation is given, so in the subsequent year, of course, you have to charge the depreciation if you're using the asset. Life to 5 साल ही है ना. At the end of the fifth year, you have to make this asset zero. Correct? Yes or no? Is that clear, Ayush? Students, any challenge in this particular aspect? Very simple. Very simple. Why revaluation model should be adopted? Why? Because revaluation shows the actual picture or fair value of the assets at a particular point in time. Why companies are adopting revaluation model? Because this revaluation model shows the actual picture or actual fair value of the asset at a particular point in time. Correct? For example, a company purchased a factory, a land and building, let's say 20 years ago. The company is using that land and building for the purpose of factory. 20 years ago, the value of that land and building is 1 crore when this company has purchased. So applying the cost model, my gross block is 1 crore only. But today the value is 50 crores. So the fair value is different from the cost. Correct? And that is why the companies are opting the revaluation model as well. Okay. Sir, let's say if the company has opted for revaluation model, it means the company has to get the fair valuation done at the end of every reporting date. Friend, standard says that if there is a major volatility in prices, major volatility, right? So every year the price are changing drastically and you have opted for revaluation model. In that case, you have to get the revaluation done at every reporting date. Okay. But sir, let's say the company has opted for the revaluation model, but there is no volatility in the prices. The prices are hardly increasing by 5-10%, right? ज़्यादा price difference नहीं है. So in that case, the companies can do the revaluation at the interval of 3 to 5 years. The company can do the revaluation at the interval of 3 to 5 years. So at what frequency revaluation is required to be done? So revaluation can be done if there is a major volatility in the prices, then at every reporting date, right? If there is a less volatility, then in a frequency of 3 to 5 years, in a frequency of 3 to 5 years, right? Okay. Is that clear? Is that clear, friends? the entity needs to apply cost or revaluation model consistently to the class of assets. Now, friend, this is very, very, very important aspect. The company needs to apply cost model, whatever model the company has opted, cost model or revaluation model consistently to a class of assets, Sir, what is meant by class of assets? Have you heard about the concept of class of assets? Have you heard about this concept of class of assets? Have you heard or not heard? To a class of assets. Sir, what is meant by class of assets? What is meant by class of assets? Class of assets means a grouping of assets of a similar nature and use in an entity's operations. Class of assets means a grouping of assets, of a similar nature, and use in an entity's operations, We will understand this with the help of an example. A grouping of assets of a similar nature and use in an entity's operation. What could be the class of asset? Examples of the class of assets are office building, factory building, office building, factory building, vehicles, machinery, furniture and fixture, office equipment, computers, aircraft, right? Aircraft, land, ships. These are the examples of class of assets, right? A grouping of assets of a similar nature and use in an entity's operation, right? In an entity's operation, okay? For example, a company has 5 office buildings. Right? A company has 5 office buildings, which is Delhi, Mumbai, Jammu, Kanpur, Ludhiana. Delhi, Mumbai, Jammu, Kanpur, Ludhiana. For Delhi and Mumbai based office building, the value of the building is increasing. For Jammu, the value is decreasing. For Kanpur, the value is also decreasing. For Ludhiana, the value is also decreasing. The company has opted for Delhi and Mumbai, the company has opted for revaluation model. Why? Because the value is increasing. Okay. But for Jammu, Kanpur and Ludhiana, the company has opted for cost model. Right? Is this treatment right? Tell me, is this treatment right? Right or wrong? Is this treatment right or wrong?
Wrong.
Yes, this is not right. Okay. This is not right. The company needs to apply a single model, either revaluation or cost to the entire 5 office building, as all the assets within same class has to be carried using the same model, right? Same model. Okay. So this is not right. The company has to apply a single model. Doesn't matter. It is cost or revaluation, whatever. A single model to the entire class, to the entire asset of a single class. What is the class of asset here? The class of asset is office building, right? So every building has a similar nature and use in an entity's operation, right? Second example. A company has four buildings. Okay. Delhi, Mumbai, Jammu, Kanpur. Again, same example. Value is increasing for Delhi, Mumbai, decreasing for Jammu, Kanpur. The company has offices. The company is using, the purpose is office purpose. The purpose of Delhi and Mumbai building is office purpose. The purpose of Jammu and Kanpur building is factory purpose. The company is doing production in the Jammu and Kanpur building, right? The company has opted for revaluation model for Delhi and Mumbai and cost model for Jammu and Kanpur. Tell me, is this treatment right? Is this treatment right now? So what are the class of asset in this case? What is the class of asset in this case? In the second example.
Office building and factory building, these two types of classes of assets are there,
Right.
and they are recognizing two different models for each of the class.
Right. So is that right or not right, Pooja?
It's right.
Yes. So yes, it is right, because there are two class of asset. One is office building, because while it is a building, but both the buildings, I mean to say Delhi, Mumbai and Jammu, Kanpur, these buildings are used for different purposes, right? While all are the buildings, but they have a different nature and use in an entity's operation. Delhi, Mumbai is used for the administrative purposes, office purposes, but Jammu, Kanpur is used for the production purposes, factory purposes, right? So there are two class of assets. In this case, there are two class of assets, right? What are the two class? One is office building and the other one is factory building. Okay. Even the depreciation are different. If you're using a building for office purpose and a depreciation and a factory purpose, the factory building will be depreciated at a higher rate in comparison to the office building. वहाँ प्रोडक्शन होगा तो डेप्रिसिएशन ज्यादा होता है, वाइब्रेशन ज्यादा होती है, बिल्डिंग की लाइफ कम हो जाती है. ओके, सो ऑफिस बिल्डिंग फैक्ट्री, देयर आर टू क्लास ऑफ एसेट, एंड फॉर office building the company has opted for revaluation model for all the assets of this class, right? And for factory building the company has opted for cost model, right? So in this case the company has applied a single model for all the assets of a particular class, of a single class or of a particular class, and hence it is right. Friends, I hope you guys have understood this. Yes, I hope you guys have understood this aspect. Yes or no? Have you understood this aspect? Is that clear? Is that clear, friends? Any question? Any question on this? Any problem? Any question? No? So friends, let's have a 10 minutes break now. Okay, let's have a 10 minutes break. It's 8:25 5 now. We will start at 8:35. Okay. We will start at 8:35. Friends, we discussed this cost model and revaluation model, right? So the company can opt for either cost model or revaluation model as its accounting policy for the remeasurement of assets at the reporting date. Accounting policy has to be applied for the complete or the whole class of property, plant and equipment, and not merely to the individual asset within a class, right? So class wise, you can opt for either cost, either revaluation. The class wise, you can opt for different models. For example, for a land, you can opt for revaluation model. For a building, you can opt for cost model. For a machinery, you can opt for cost model, right? For vehicles, you can opt for revaluation model. So class wise, you can opt for different models. But once you opted a model for a class, all the assets within that class has to be measured as per the same model which is applicable for that entire class. Okay. And we discussed that in case of a cost model, your carrying value is equal to cost minus accumulated depreciation minus accumulated impairment loss, right? In case of a revaluation model, after initial recognition, PP can be carried at a revalued amount, which is fair value at the revaluation date. Whenever you are doing revaluation, for every balance sheet date, when you compute carrying value, it is equal to revalued amount minus subsequent depreciation minus subsequent impairment losses. Why subsequent? You guys have understood with the help of that example that whenever you are carrying your asset at a fair value, that fair value become the cost on that date. That fair value become the new value on that particular date, right? If a single item of PP is revalued, then the entire class of PP to which that item belongs should be revalued. And what is the class of asset? A grouping of asset of a similar nature and use in an entity's operations. Okay. So, sir, if we have opted for a revaluation model, do we need to revalue every year? Answer is standard says that valuation need not to be performed every year. Okay. Or every reporting date, right? If there is a major volatility, then every reporting date. If there is no major volatility, then every 3 to 5 years. Okay. Friends, now one of the most important part, revaluation gains and losses. Friends, whenever the company has opted for revaluation model, and when there is a revaluation increase, whenever there is a revaluation increase, where that revaluation increase will go? For example, the value of the building is 10 lakh rupees. The cost of the building is 10 lakh rupees, right? At the end of the first year, the company has opted for the revaluation model and the fair value becomes 15 lakh rupees. The fair value becomes 15 lakh rupees. What is the accounting entry? What is the accounting entry? Can anyone tell me the accounting entry? Ankita, what is the accounting entry in this case? The 10 lakh rupees is the value or the cost of the building. The fair value become 15 lakh rupees. So what is the accounting entry in this case? There is an increase. There is an increase in the value. So what is the accounting entry?
Asset account debit to revaluation reserve.
Yes. So accounting entry is asset account debit to revaluation reserve or revaluation surplus, whatever name you can take. Either it is a revaluation reserve or revaluation surplus. You're right. So asset account debit to revaluation surplus, which goes to OCI. This revaluation surplus will go to other comprehensive income, right? So asset account debit to revaluation surplus, your asset value will be increased and the differential 5 lakh will go to revaluation surplus, revaluation reserve, right? Very good. Second example, let's say the cost of the building is 10 lakh rupees. You are doing the revaluation for the first time at the end of the first year and the value becomes 8 lakh rupees. Value gir gayi. What is the accounting entry? What is the accounting entry? Any students who can tell me the accounting entry? when the value has been decreased from 10 lakh rupees to 8 lakh rupees?
If whenever there is decrease in the asset value, and if we have created earlier evaluation reserve, in that case,
So I am talking about the first time. I am talking about the first time, Pooja.
okay.
So it is end of the first year. First time the company has done the fair valuation and the value of the asset.
Debit the losses to P&L account, sir.
Yes,
Yes,
the right.
P&L.
Yes. So accounting entry is PP will be credited to PP 2 lakh rupees. Debit impairment loss in the P&L. So friends, whenever for the first time when the company is doing the fair valuation, when the company is doing the revaluation, if for the first time there is an increase, the increase will go to the revaluation surplus, revaluation reserve in OCI, in other comprehensive income. But whenever there is a decrease, it will be like a impairment loss. The decrease is an impairment loss. It will go to the P&L, right? It will go to the P&L. This is what standard says, right? Clear? But let's say that initially there was an increase. Initially there was an increase. In my first example, the cost was 10 lakh rupees. And at the end of the first year, the company has done the fair valuation. The fair valuation become 15 lakh rupees. 5 lakh rupee has been debited to PP, credited to the revaluation reserve in OCI. Now in the next year, again the company has done the fair valuation. The market is very volatile. The company has done the fair valuation. Now the value has come down to 12 lakh rupees. Initially, in the first time, there was an increase. In the second year, there is a decrease. So from 15 lakh, it become 12 lakh now. So what is the impact of this 3 lakh? What is the accounting entry?
We will reverse and debit
3
the
lakh will go to
revaluation reserve.
revaluation reserve.
Yes. So whatever revaluation surplus we have recognized, whatever revaluation surplus we have taken, we have to reverse the revaluation surplus to the extent of decrease. So from 15 lakh, it become 12 lakh. There is a decrease of 3 lakh. There is a decrease of 3 lakh. So what is the accounting entry? Since it is a decrease, your PP should be credited 3 lakh and your revaluation reserve OCI will be debited. So revaluation reserve debit 3 lakh rupees, to PP 3 lakh rupees. I hope it is clear. Next part.
Sir, Abrakesh.
Yeah, Brakesh.
Sir, suppose the earlier revaluation reserve is less than 3 lakhs, then balance will be go to
Abrakesh, I'm coming to that. So I'm just moving step by step, right? So
Okay.
yeah. So next one. Now, so end of the first year, the company has done the fair valuation. Okay. It was 15 lakh rupees. Cost is 10 lakh rupees. End of the first year, fair valuation 15 lakh rupees. End of the second year, the fair valuation becomes 18 lakh rupees. Now, what is the treatment of this increase in 3 lakh rupees?
Credit
Again,
revaluation reserve.
yes, again it will go to revaluation reserve again. So PP will be debited, revaluation reserve will be credited again. Okay. So now the value become 18 lakh rupees at the end of second year. This PP, this asset was located in Israel. At the end of the third year, due to this Israel war, right? What happened? Due to this Israel war, the market value of this property has gone down to 8 lakh rupees. From the 18 lakh rupees, it has gone down to 8 lakh rupees. 18 लाख से 8 लाख पे आ गई. अब क्या करें?
To the extent of 8 lakhs, we will reverse the revaluation reserve and 2 lakhs to the P&L.
Yes. Very good, Anila. So whatever revaluation surplus I have, first of all, I will reverse that revaluation surplus. Revaluation surplus account debit. Sir, but I have only 8 lakh rupees of revaluation surplus. Okay. Revaluation surplus debit 8 lakh rupees. To PP credit 10 lakh rupees. Sir, where this 2 lakh will go? This 2 lakh will go as an impairment loss in the P&L. Revaluation surplus debit 8 lakh rupees. Impairment loss P&L debit 2 lakh rupees. To PP credit 10 lakh rupees. Right? So whatever revaluation surplus I have, to that extent, I will reverse my revaluation surplus. Beyond that, I will take the decrease, I will take the loss to the P&L. Right? Is that right, Abrakesh? Is that clear?
Yes, sir. Thank you.
Okay. Okay.
Clear, sir.
Yes. Now the second leg. First time there was a decrease. Okay. The cost was 10 lakh rupees at the end of the first year. When the company has done the fair valuation, it becomes, when the company has done the fair valuation, it becomes what? 8 lakh rupees. Okay. So now in the second year, again, when the company has done the fair valuation, it becomes 11 lakh rupees. The fair value becomes 11 lakh rupees. What is the treatment of increase of 3 lakh rupees?
It will be credited to P&L.
The entire 3 lakh will go to P&L?
No, to the extent the amount which we have debited earlier, only to that extent it will be credited to P&L, and the balance, if any exceeds, it will be credited to reserve.
Perfectly all right, Pooja. So whatever P&L we have debited 2 lakh rupees as an impairment loss in the P&L. So we will reverse that impairment loss. We will credit the impairment loss in the P&L. So we will credit impairment gain, right? So 2 impairment loss P&L, okay, 2, which is 2 lakh rupees, right? But I need to debit my PP by 3 lakh rupees. PP debit 3 lakh, 2 impairment loss P&L 2 lakh, 2 revaluation reserve OCI 1 lakh rupees. Very good. So whatever I have, to the extent whichever I have debited, I will credit that, and remaining I will take it to the revaluation reserve. I hope it is clear to all of you, friends. I hope it is clear to all of you. Yes. So friends, so let me explain you again with the help of accounting entries on the Excel file. So let me take you to the Excel file, and please confirm once the Excel file is visible. Please confirm once the Excel file is visible. I'll quickly take you with that. Revaluation gains and losses. Example, building was purchased. Case 1. On 1st April 19, the value of the building is 10 lakh. On 31st March 20, after 1 year, it becomes 12 lakh. On 31st March 21, it becomes 9 lakh. Right? It becomes 9 lakh. Second case, 1st April 19, 10 lakh. 31st March 20, it was decreased. Then it was subsequently increased. So first case was initially increase, subsequent decrease, right? So let's talk about the first case. 1st April 2019, it was 10 lakh rupees. On 31st March 20, it was 12 lakh rupees. So PP increased by 2 lakh rupees. Then in the next year, it was decreased by 3 lakh rupees. From 12, it becomes 9. So the company has opted for revaluation model. What is the accounting on 31st March 20? Since from 10, it becomes 12. So building PP account debit to revaluation surplus 2 lakh rupees. 12 minus 10, right? This minus this, 12 minus 10. Okay. Then next entry, 31st March 21. From 12 lakh, it becomes 9 lakh. So PP credit 3 lakh rupees, right? Debit revaluation surplus 2 lakh, impairment loss P&L 1 lakh, right? So whatever I have in the revaluation surplus, I have reversed that. Correct? Then whatever was left, the balance I have taken to the P&L. Correct? This is what you guys have explained. The second case, in the first year, from 10 lakh, it becomes 7 lakh. There is a decrease of 3 lakh. Subsequently, there is an increase of 4 lakh rupees. So on the first year, in the first year, whenever there is a first time decrease, the accounting entry is impairment loss P&L account debit, impairment loss P&L account debit to building account. Second entry, when it is increasing, so you have to debit your building by 4 lakh rupees, and you have to credit whatever impairment loss you have debited, you have to reverse that 3 lakh rupees, and the remaining will go to revaluation surplus. This is what we have discussed just now. And I have also given you on the Excel file, I have also given you the accounting entries and this example. Okay. Okay, friends. Is that clear, friends? Is that clear? Utilization of revaluation surplus. Sir, what is the utilization of this revaluation surplus? Sir, what is the utilization of this revaluation surplus? So let me talk about the utilization of revaluation surplus. Standard says that standard says that whenever there is a revaluation surplus, okay, आप क्या करोगे उस revaluation surplus का? Whether my Excel file is visible to all of you? Is that visible?
Visible, sir.
Okay. So utilization of revaluation surplus, for example, the company has done the fair valuation and the company has recognized revaluation surplus, and subsequently there was never any decrease. Okay. So standard says that this revaluation surplus can be utilized either during the lifetime of the asset or during the end of the life of the asset. So at the time of disposal or derecognition of the asset, when the asset is getting disposed of, you have revalued a building. There was a 10 lakh rupees of revaluation surplus on the building. Now you are selling your building. Okay. You are disposing of your building. You are selling your building. So friends, whatever is the revaluation surplus, it will transfer to the retained earnings. Okay. What is the accounting entry? Revaluation surplus account debit to retained earning. It is a balance sheet to balance sheet entry. It is a balance sheet to balance sheet entry. Revaluation surplus account debit to retained earnings. So this 10 lakh rupees will transfer to the retained earnings, right? Right? Is that clear? Is that clear? For example, A Limited has revalued its building on which revaluation surplus comes out to rupees 10 lakhs, right? The company has sold the building. The company has sold the building in the next year. What is the treatment of revaluation surplus on the date of sale, right? So what is the treatment? Simple. This revaluation surplus will be transferred to the retained earning. What is the accounting entry? The accounting entry is revaluation surplus account debit to retained earning. This is 10 lakh, right? Okay. So this revaluation surplus will be reversed and it will be credited to retained earnings. Answer. Revaluation surplus will be transferred to retained earnings at the time of derecognition. Okay, this is the accounting entry, right? So number one, at the time of disposal or derecognition of asset. Number two, during the life of the asset. Right? You can reverse your revaluation surplus during the life of the asset as well. Standard says that the revaluation surplus can be utilized every year to the extent of extra depreciation. Friends, life of the asset is 10 years. Cost is 1 lakh rupees. Revalued amount is 1,40,000 rupees. Okay. So the life is 10 years. Cost is 1 lakh. Revalued amount is 1,40,000. So on the basis of original amount, what is my depreciation on the basis of original amount? What is my depreciation? 1 lakh divided by 10, 10,000. What is my depreciation on the basis of revalued amount? 1,40,000 divided by 10, 14,000. What is the extra depreciation? 4,000. Standard says that whatever depreciation is there, it has to debit to the P&L account. Okay. अगर आप revaluation भी कर रहे हो, तो revaluation करने से जो भी depreciation आता है, it has to go to the P&L. Right. So from the P&L, it has to go to the retained earnings. Profit to retained earning में जाता है ना? Right. So standard has given you two options to utilize the revaluation surplus. Number one, whatever revaluation surplus balance is there, at the time of disposal or derecognition of that asset, transfer it to the retained earning. Or you can also utilize your revaluation surplus during the lifetime of the asset, right? But sir, how? To the extent of extra depreciation which you are charging in your P&L, right? Like in this example, the extra depreciation is 4,000 rupees. Extra depreciation is 4,000 rupees. Okay. Friends, why this extra depreciation has been there? Because of revaluation, and you have a revaluation surplus also. Okay. So standard says that every year, to the extent of extra depreciation, you can transfer your revaluation surplus to retained earnings, right? For example, in this case, revaluation surplus account debit to retained earning. It is a, again, balance sheet to balance sheet entry. So my dear friends, whenever there is a revaluation surplus, it will go to retained earnings, either at the date of derecognition or during the lifetime of the asset. If you are taking the entry at the date of derecognition, whatever balance in revaluation surplus is there, reverse that and credit your retained earnings. But during the lifetime of the asset, what you have to do, whatever is the impact of extra depreciation due to revaluation, take that extra depreciation impact to that extent, debit your revaluation surplus and credit your retained earnings, right? I hope it is clear to all of you, my dear friends. I hope it is clear to all of you. Yes. Transfer from revaluation surplus to retained earnings are made in following circumstances and are not made through profit or loss. When the asset is derecognized and when the asset is used, right? So when the asset is used, it is a difference between depreciation based on revalued amount and the original cost, which is extra depreciation. Okay. Is that clear, my dear friends? Is that clear or not clear? Is that clear? So this is what we have discussed. Friends, let me take you on the ICAI study material and let's discuss one question on that revaluation. Please confirm once ICAI study material is visible to all of you. Please confirm once it is visible. I hope it is visible now.
Yes, sir.
Yes. Let's talk about illustration number 4. Okay. Revaluation model for entire class. Or just a minute. Yes, let's go to illustration number 4. I hope this illustration number 4 is visible. Venus Limited is a large manufacturing group. It owns a considerable number of industrial buildings. Mind this word, such as factories and warehouses and office building in several capital cities. The industrial buildings are located in industrial zones, whereas the office buildings are in central business district of the cities. Venus Limited management wants to apply the Ind AS 16 revaluation model to subsequent measurement of the office building, but continue to apply the historical cost model to the industrial buildings, right? So Venus Limited wants revaluation model for office building and cost model for the industrial building. Analyze the accounting treatment to be applied by the management in the light of Ind AS 16. Whether Venus Limited contention is correct or not correct. Whether Venus Limited can continue. Whether Venus Limited can do revaluation model for office building and cost model for factory building. Yes or no?
Yes, sir. It can do so, sir. Different
can
class
do
of asset.
Yes. So Venus Limited management can apply the revaluation model to office buildings, right? The office building can be clearly distinguished from the factory buildings in terms of their function, nature, and their location. Ind AS 16 permit asset to be revalued on a class by class basis, right? The different characteristics of the buildings enable them to be classified as a different PPE classes. The different measurement models can therefore be applied to these classes for subsequent measurement. All properties within the class of office building must therefore be carried at revalued amount, and separate disclosure of the two classes must be given. Okay. And company needs to give the separate disclosure that these are the office building, these are the factory building. So the gross block, accumulated depreciation, and net block has to be shown by way of class of assets. Has to be shown by way of class of assets, right? I will show you one of the schedule also. So illustration number 4 we have covered. Let's talk about illustration number 5. Utilization of revaluation surplus. We just talked about na? At the time of derecognition or during the lifetime of the asset. An item of PP was purchased for rupees 9 lakh on 1st April 2001. It is estimated to have a useful life of 10 years and is depreciated on a straight line basis. On 1st April 2003, the asset is revalued to 9,60,000. The useful life remains unchanged at 10 years. Ignore impact of deferred taxes. Calculate depreciation and revaluation surplus for 2003 for H per Ind AS 16. Friends, an item was purchased for rupees 9 lakh and the life was 10 years. So what is the depreciation every year? 90,000. Okay. So on 1st April 2001, this asset was purchased. Then 31st March 2002, you have charged the depreciation. 31st March 2003, you have charged the depreciation. So it is 9 lakh minus 90 minus 90. 7,20,000 was the carrying value at that point of time. 7,20,000 was the carrying value. Okay. And on 1st April 2003, the asset is revalued to 9,60,000. What is the difference between 960 and 720? 7,20,000 की वैल्यू थी बट रिवैल्यूएशन हुआ 9,60,000 में. तो 720 960 का डिफरेंस कितना है? 240. Where 240 will go where? 240 will go to the revaluation reserve OCI. 240 will go to the revaluation reserve OCI.
Yes, sir.
Okay. Okay. So now what is my remaining life? On 1st April 2003, 9,60,000 is my revalued amount. What is my depreciation? What is my remaining life in the next year? What is my depreciation?
8 years is remaining life, sir.
8 years is
will be
remaining
the
life.
depreciation.
So what is my depreciation? 9,60,000 divided by 8. 1,20,000. What was my earlier depreciation? 90,000. 9 lakh divided by 10. So what is my extra hit to the P&L due to revaluation in terms of depreciation?
30,000.
30,000. Because the depreciation on the revalued amount comes out at 1,20,000. The depreciation on the basis of historical cost or original amount, it is 90,000. The additional depreciation is 30,000. Right. So what you can do? To this extent, you can debit the revaluation surplus and you can credit the retained earnings. Okay. What is the balance of your retained earning? What was the balance initially? 2,40,000. 960 minus 720. Have you understood how this balance has come?
Yes, sir.
Yes, sir.
Pooja, you have any question?
No, sir.
Okay. And how much I have transferred to retained earning in the first year of revaluation? Revaluation के पहले साल में मैंने कितना ट्रांसफर कर दिया? 30,000. So what is my balance of revaluation surplus? 2,10,000. Right. So this is what we have discussed, right? And this is what we have practiced in ICAI illustration. Okay. Yes. So friends, I want to take you through this increase or decrease quickly as well.
Sir, I have one
Yes.
query in illustration number 4.
In illustration number
4.
Yes. Tell me.
In the solution part, they say that the management can apply revaluation model only to office buildings. So this is a condition, or they are just simply explaining the part which was asked in the question.
Just a minute.
Is there any condition that
Where you are reading this?
Page number 6.62, sir.
No. Is it in question or is
First
it in
line.
solution? First line.
No, solution first line.
Venus Limited management can apply the revaluation model only to the office building. So they are explaining in the context of this question, because in this question, it is written that the question is asking that the Venus Limited wants to apply revaluation model to office building, but continue to apply the historical cost to the industrial building, right? तो वो बता रहा है कि विनस लिमिटेड रिवैल्यूएशन मॉडल ऑफिस बिल्डिंग के लिए अप्लाई करना चाहता है एंड कॉस्ट मॉडल कंटिन्यू करना चाहते हैं किस पे, और फैक्ट्री बिल्डिंग्स पे, इंडस्ट्रियल बिल्डिंग्स पे, राइट? So basically it means the company was applying cost model on the factory building, okay? And now the company is continuing the cost model on the factory building, but on the office building, the company wants to apply revaluation model. So this is what this question says, that if this company wants, this company can apply this revaluation model to the office building. There is no any condition, right? So the condition is different model can be applied to different class of assets. It can be applied. So आपके पूरे के पूरे पीपी पे एक मॉडल भी हो सकता है और क्लास वाइज भी हो सकता है. Generally what happens, let me tell you, the real life scenario is normally the companies have a single model for all the class of assets. Normally practically मैं बात कर रहा हूँ. But अगर कोई कंपनी जनरली क्या करती है, लैंड एंड बिल्डिंग को रीवैल्यू करते हैं, फेयर वैल्यू करते हैं, राइट? सो फॉर लैंड एंड बिल्डिंग द कंपनी यूज्ड टू अप्लाई रिवैल्यूएशन मॉडल. फॉर रिमेनिंग एसेट द कंपनी यूज्ड टू अप्लाई कॉस्ट मॉडल, राइट? तो ये कोई कंडीशन नहीं है, ये इस क्वेश्चन का आंसर दिया है कि विनस लिमिटेड कैन अप्लाई रिवैल्यूएशन मॉडल टू ऑफिस बिल्डिंग, बट इट हैज टू अप्लाई कॉस्ट मॉडल टू द फैक्ट्री बिल्डिंग. तो वो लिखा है यहाँ पे, ठीक है?
ओके सर.
So quickly let me take you through one of the. Yes, Ayush, you can unmute yourself and you can ask the question.
Good morning, sir. So my question is regarding the revaluation surplus treatment with respect to disposal of asset at the time of disposal of asset. So during the time of disposal, we might have profit or loss on the disposal. So do we need to adjust the profit and loss with the revaluation reserve, or we are carrying it to the P&L?
No, Ayush. So basically what happens, let me discuss with the help of an example, right? Let's say the cost of the asset was 1 lakh rupees. It was revalued at 1.5 lakh rupees. Okay. The building was revalued at 1.5 lakh rupees. What is the accounting entry? PP building account debit 50,000 to revaluation surplus OCI 50,000, right?
Yes, sir.
So 50,000 has been transferred to revaluation surplus account. Now the company has sold the asset at 1,80,000 rupees in the next year, right? So my WDV become 1,50,000. My revalued amount is 150. 50 transferred to revaluation surplus. Now I am selling it at 180. Okay. Now what is the accounting entry? Bank account debit 180, to PP 150, to profit on sale of PP 30,000, right? And that 50,000 which was in the revaluation surplus debit 50,000, credit retained earnings 50,000, right? This is the accounting entry.
Okay, sir. So similar entry would be passed in case of loss.
Yes. So similar entry would but Ayush, what happened whenever there is a loss, right? For example, you are selling the asset, and whenever there is a loss, in case of a loss, while the standard is silent, but you can draw an analogy, because since there is a revaluation surplus and there is a loss, means the value has been decreased, right?
Yes, sir.
Value decrease हो गई है ना. In that case, you can knock off from revaluation surplus to the extent the loss is there. Okay.
Okay, sir.
For example, the value has gone down to 1,30,000 when you are selling the asset. The value has gone down to 1,30,000. Okay. Now what is your bank account debit? 1,30,000. What is your credit? 2 PP credit 1,50,000. Then you have to debit your revaluation surplus by 20,000, and the remaining revaluation surplus will be transferred to retained earnings. Okay.
Okay, sir. Got it. Thank you.
Okay. Any other question? Yes, Abhishek, please ask your question. So, Abrakesh, please ask your question.
Hello. Sir, am I audible?
Yes, Abrakesh. Yes.
Hello.
Yes, Abrakesh, please ask. Abrakesh, can you be little louder?
Sir, am I audible now?
Yes, you are audible now. Yes.
Sir, my question is ki in case of revaluation loss, there is a balance in revaluation reserve, then we will transfer back this to revaluation reserve. Now, what I want to ask is it necessary that the revaluation reserve reserve and the revaluation loss as a one-to-one comparison? What I want to say, one class revaluation
Understood.
reserve is there.
Understood. Abrakesh, understood. So what he is asking, sir, let's say the company has two buildings and one building is in Delhi and one building is in Mumbai, right? So the company has applied revaluation model on both the building because it's a single class of asset. Okay, for example. So I'm taking example of the same class of asset which has a multiple asset. Same class, multiple asset. One asset having a revaluation surplus, other asset having a revaluation loss. Because when the fair valuation has been done, so one asset got increase, one asset got decrease. So Abrakesh is asking, sir, can I set off my revaluation surplus from one asset with the revaluation surplus, with the revaluation loss from the another asset? Answer is no. It has to be 1-to-1. Your fixed asset register will carry the values 1-to-1. Okay, it has to be 1-to-1. Right? तो मैंने तो अब्रकेश आपको बता दिया, सेम क्लास में भी आप नहीं कर सकते तो डिफरेंट क्लास का कर सकते हैं क्या?
Obviously, yes, agreed. Thank you.
Right. So friends, I was searching a question on this revaluation surplus, first increase then decrease. So it is there in my my PPT. So while on the Excel I have already covered it. So you can, when I'll share my PPT, you can practice this study, case study 7, which talks about the treatment in case of first increase, then decrease, then increase, first decrease, then increase, then decrease, right? So this is the question which you can solve in this from this PPT. Okay. So I'm not discussing it right now. I've already discussed 2 times. Okay. Yes. So this part we have covered. Friends, now we have arrived at one of the most important part of this standard, which is depreciation. What is meant by depreciation? Friends, depreciation is nothing. It's a kind of a, I would say, one of the example of a matching concept, one of the example of an accrual concept, right? One of the example of a matching concept. The company has purchased a factory, including plant and machineries. The value is 100 crores. Today, the company has taken a bank loan. The company has purchased machineries for 100 crores. Now the company will start production and the company will start earning from the sale of goods and services. But today the company has already spent 100 crores. Should I take it to P&L? Answer is no. I have to capitalize this as a plant and machinery. I have to capitalize this as a plant and machinery. Correct? Friends, now what happens? This 100 crore rupees of plant and machinery has a life, and the life is only 20 years. Correct? So after 20 years, I have to again rebuild this plant and machinery because this plant and machinery is of no use. But whatever 100 crore I am spending today, this will give me a future economic benefit for a life of 20 years. Just due to this plant and machinery, I will be able to earn my bread and butter for next 20 years. Right? This plant and machinery will give me future economic benefit for next 20 years. Friends, means I will earn revenue for next 20 years. I will earn income for next 20 years. And whatever 100 crores I was spent on the day one, don't you think that 100 crore has to be splitted in the proportion of future economic benefits, which I will receive from this machinery, right? Which I'll receive from this machinery and I'll earn revenue. So don't you think कि 100 करोड़ को भी हमें स्प्रेड ओवर करना चाहिए, हमें इस 100 करोड़ को भी हमें स्प्लिट करना चाहिए. We have to spread over and we have to split this 100 crores on in the proportion of the future economic benefit which I'm earning and receiving, right? So what is that? That is known as a depreciation. That is known as a depreciation. This is a non-cash expense, depreciation. The cash you has already spent. Now you are accruing this non-cash expenditure every year in the proportion of future economic benefit received. So what is the depreciation? Depreciation is a depreciable amount of an asset which has to be allocated on a systematic basis over the useful life. Depreciation is a systematic allocation of a depreciable amount over the useful life of the asset. Over the useful life of the asset. Depreciation charges should be recognized as an expense until and unless they are included in the carrying amount of another asset. Until and unless they are included in the carrying amount of another asset. Okay. Carrying amount of another asset. Okay. Friends, what is a depreciable amount? Depreciable amount is the cost minus residual value. For example, the building has a cost of 1 lakh rupees. The estimated residual value or scrap value is 10,000 rupees. The life is 10 years. What is the depreciable amount in this case? The cost is 1 lakh. The estimated residual value is 10,000. The life is 10 years. My question is, what is the depreciable amount?
90,000.
90,000, which is cost minus estimated residual value. 90,000. I need to depreciate this depreciable amount, which is 90,000 over the 10-year life. So 90,000 divided by 10 will give me 9,000 rupees per annum depreciation. So what I am doing, I am allocating my depreciable amount on a systematic basis over the useful life of the asset. Okay. So this depreciation charges should be recognized as an expense until and unless they are included in the carrying amount of another asset. I'm using one of my machinery in the construction of another asset. मैं एक बिल्डिंग कंस्ट्रक्ट कर रहा हूं, मेरे पास एक मिक्सर मशीन है. I have a mixer machine which is used for mixing cement, sand and other material, right? And I'm using this mixer machine for 6 months for the construction of my building. So in that case, the depreciation of this mixer machine for a period of 6 months will be capitalized to the cost of building as a cost of construction, right? Otherwise, I have to debit my depreciation expense in the P&L. Friends, Ind AS 16, if I talk about the difference between AS and Ind AS, while today this difference does not exist, I am talking about if you guys have read Accounting Standard 10, जो कि old वाला 7-8 years back. So the largest difference between the old accounting standard and this Ind AS 16 is componentization, right? The standard says that if the asset has a different useful life, if the asset has a significant component which has a different useful life, you remember the significant component, major replacement, major inspection, major overhaul, which has a different useful life. I have shown you how to capitalize in the fixed asset register. I have shown you engine other than engine, truck and engine, aircraft inspection. I have told you, na, that has
Yes,
to be
sir.
shown as a separate component, right?
Yes, sir.
So friends, standard says that if you are purchasing an asset and that asset has some significant component, sir, what could be the significant component? Significant component means the component which are having, for example, which are having a value more than 10% of the entire cost of the asset. Okay. So for example, a single component, inspection component, which have a more than 10% value of the entire asset. The entire asset value is 1 crore and this inspection component has a value of 15 lakh. So more than 10%. Okay. It could be 5% also. It is as per company's policy. But generally it should be taken at beyond more than 5% or 10%. Okay. So friends, if there is an asset which has a multiple component, and if that multiple component has a different useful life, in that case, those component has to be capitalized separately and depreciated separately over their respective useful life. Okay. For example, my dear friends, for example, there is a windmill. So example of componentization, let me take you example of componentization and how it is going to be depreciated. Okay. I hope my Excel file is visible to all of you. I hope this Excel file is visible. Is it visible now?
Yes, sir.
Depreciation. if an asset has a different, if an asset has a significant component with different useful life, then such component needs to be capitalized and depreciated separately in their respective useful life. Example. What is the example? Example, there is a windmill, for example, there is a windmill. Okay. So how to maintain the fixed asset register of that windmill? Example of componentization. Example of componentization. Windmill. Fixed asset register. This is my fixed asset register. This is my windmill. This windmill has a multiple component. For example, turbine, generator, remainder of the windmill. Turbine, generator. This windmill has a one component which is a turbine. Okay. Then this generator is also part of this windmill generator, right? This generator is, integrated in this windmill. It is not a separate asset, but this component is separate. And the other than above means remainder, right? Life. What is the life of these assets? The life of this component, for example, the life of the windmill is 15 years. So the component life is also, what is the component life? 5 years, 8 years, and the remaining life is 15 years. Okay. Cost. This is turbine cost is, for example, 100 lakhs. The generator cost is cost is, for example, 50 lakhs. And the other cost is, for example, 550 lakhs. The total cost of this windmill is 700 lakhs. Okay. Depreciation. This needs to be depreciated over a 5-year period. This needs to be 8 year, and this needs to be how much? This has to be 15 years. So what is my total depreciation? My total depreciation is 62. Total depreciation is 62.91 lakhs. Okay. Then my net block. My net block is 637.08 lakhs. So this is how this accounting needs to be done. Second example of componentization. Aircraft. Boeing 777. Okay. Inspection component. Aircraft. The life of the aircraft is 20 years. And every 5 years, the company has to get the inspection done. Cost in crores. The cost of the inspection component is, for example, it is 90. Cost of the inspection component is 10 crore, and the cost of the aircraft is 90 crores. The total cost is how much? The total cost is 100 crores. Depreciation and net block. This inspection component has to be depreciated over a period of 5 years. This remainder, other than inspection component, is depreciated over a period of 20 years, right? This is your depreciation and your net block is. I hope you guys have understood how this depreciation needs to be calculated, how this componentization role needs to be played, right? I hope it is clear to all of you now. So the significant component has to be depreciated over the useful life. The significant component could be major replacement part also, major inspection and overhaul also. Okay. This we have discussed. Friends, now many times in interview when I ask question to the student, when depreciation will start, you know what answer I got from every student? The answer which I get from every student is depreciation will start when asset is put to use. When asset is put to use, right? I have purchased a car. Okay. When I got the delivery of the car, same day, I got the ticket for the USA. And I went to USA. My company has sent me USA for 6 months. So I took the delivery of the car. I parked my car in the godown. I parked my car in the parking, which is a covered parking, and no one is using that car, right? So the life of the car is 10 years. After 6 months, I came back to India and I started using that car. Tell me whether the car was put to use at that point of time when I got the delivery, whether that car was put to use or that car was available for use.
Was available for use.
That car was available for use. For example, I purchased this car on 1st October 2023. So on 1st October 2023, that car was available for use, but that car was not put to use. The car becomes put to use on 1st April 2024, which is after 6 months, right? So simple example, I used to give to the fresher chartered accountants who just cleared CA final examination with 60-65 marks in FR. And I used to ask, please tell me whether I should charge depreciation or I should not charge depreciation. So people get confused. So friends, ये put to use का concept income tax में है, accounting standard में नहीं है. So Ind AS says that depreciation will start when the asset is available for use, when the asset becomes ready for use. This car was available for use on 1st October 2023. The life of the car is 10 years. The cost of the car is 10 lakh rupees. So 10 lakh divided by 10 multiply by half year, which is 6 month depreciation. Okay, क्योंकि 1st October को purchase किया है. So this will be the amount of depreciation which has to be debited in the P&L in the first year. Is that clear? समझ में आया?
Yes, sir.
Is that clear? Okay. Okay. Fantastic. Fantastic. So depreciation of an asset begins when it is available for use. Means when it is in the location and condition necessary for it to be capable of operating in the manner intended by the management. What does it mean? Why it is written that location and condition? I purchased a machinery. Okay. So I purchased a machinery from China. And that machine is absolutely ready. Whenever it comes to me, I can quickly start the production. This machine does not require any installation. But can I say that this machine was in China, I paid for it? Can I capitalize that machinery today in my books of accounts?
No.
Why
No,
no?
sir.
Because that machine is not available for use. Right? That machine will become available for use when it is in the location and condition necessary for me to use that machine. I cannot go to China to produce my goods. I can produce my goods when that machine will come to my factory, come to my premises, right? So that is why the word location is also written, right? So friends, examiner may confuse you by writing that when you paid for the price of that asset, that you can quickly, that asset is readily available for use. So whenever it comes to you, you can quickly start production, right? You have paid for it. The machine is lying with the vendor. The vendor has to transport that machine to your godown, correct? So in that case, don't get confused in the pressure of exam. Just think about, oh, this machine is not available to me. So it is not available for use. So in this case, I cannot charge depreciation. Correct? और number भी बहुत simple होंगे. 1 lakh rupees, 10-year life, 6 months. So in the pressure, what you will do, you will quickly calculate 50,000 is the depreciation which I am going to charge. Have you understood? So these kind of mistakes may happen. Okay, try to avoid. Is that clear? Yaad rahega? Would you be able to remember?
Yes, sir.
Yes, depreciation is charged till the point residual value is greater than or equal to carrying amount. My cost is 1 lakh rupee. My residual value is 10,000 rupees. My depreciable amount is 90,000 rupees. So of course, I have to depreciate 90,000. जब वो 10,000 तक आ जाएगा वो तो मेरा residual value है. I will not depreciate 10,000 also. Okay. So this is what it is written here. Depreciation stops when an asset is derecognized. You have purchased a car. The life of the car is 10 years. You have used the car for 4 years. After 4 years, you have sold the car. So will you charge depreciation in the next 6 years also? You don't have the car.
No, sir.
So this is written in the standard, right? So when an asset is derecognized. So of course, this is but obvious. This is but obvious. So if you don't have the asset, why you will depreciate the asset? How you compute the depreciable amount? Correct. So this is what it is written in the standard, that depreciation should be stopped when the asset is derecognized or the asset is held for sale, classified as held for sale under Ind AS 105. I'll teach you Ind AS 105. You will be able to understand that when an asset needs to be classified as held for sale, if an asset meet the criteria of held for sale, right, under Ind AS 105, in that case, the depreciation will be automatically stopped from that date. Okay. From that date, that asset is no more a PPE. That asset will come under the category of asset held for sale and depreciation will be stopped. Okay. Sir, what is a held for sale? I will discuss when I'll teach you Ind AS 105. That is why it is written here. Held for sale under Ind AS 105. Okay. It is a separate standard. Depreciation does not stop automatically when an asset is idle. Right. So the company is in Ludhiana. The company is into the woolen business. The company has 5 machineries and the company is producing woolen clothes from those machineries. In summer season, 6 months in a year, every 6 months in a year, the company used to, stop the production from those machineries because the demand is not there. Okay. So those machineries were lying idle for every 6 months in a year, like my car was lying idle in my parking area. So standard says that depreciation does not stop if your asset is lying idle. Depreciation will run. Okay. वैसे भी आप एक बात बताओ, मशीनरी या कार अगर वो खाली भी पड़ी है, if you are not using that car, you're not using that machinery, whether that will depreciate or not depreciate. Depreciation comes due to efflux of time as well. Due to efflux of time, correct? You took the car from the showroom, right? This car becomes 1 year old and you have only traveled, let's say 50 kilometers in a year from that car. Still the value will be drastically gone down, right? Why? Because the depreciation does not relating to the usage only. Depreciation is also a result of efflux of time. Whenever time passes, your asset becomes older, right? The value will be decreased. Okay. So these are the few concepts which is there in day 16. Okay. Friends, there are 3 methods of depreciation. You remember, I told that this depreciation is one of the example of matching concept, right? So your depreciation depends on the future economic benefit. There are 3 methods of depreciation. What are the 3 methods of depreciation? Can anyone tell me what are the 3 methods of depreciation? I'm asking a very simple question.
Sir, WDV method, SLM method, WDV method, SLM method, and weighted average method.
Yes. WDV, SLM, and not weighted average. So SLM method is there, straight line method, written down value method, and unit of production method or unit of digit method.
Unit, yes.
Unit of production or unit of digit method. So let me take an example for each one of them. Right. Friends, you have purchased a machinery and you are expecting a similar production from the machinery, similar production. The life of the machine is 10 years and you are expecting a similar production over the period of 10 years, right? So it means you are expecting a consistent future economic benefits. It means what is the appropriate method which you needs to apply? Which method is appropriate in this case? If you are expecting a consistent future economic benefit.
Straight line method.
Straight line method, simple, right? So if you are expecting a consistent future economic benefit, you have to apply straight line method. You will charge equal depreciation over the life of the asset. This is straight line method. You have purchased a machinery. In the initial years, the efficiency and output of the machine is much higher in comparison to the later years. So whenever the machine becomes older, the efficiency and output of the machine will go down, right? So in this case, the company is expecting a reducing future economic benefit. The company is expecting a reducing future economic benefits. So if the future economic benefit is having a reducing trend, so what is the appropriate method of depreciation in this case?
WDV method, sir.
Written down value method, reducing value method, WDV method. It means the company, since the company is expecting higher future economic benefit in the initial year, the company has to charge higher depreciation in the initial years, right? Friends, third example. The company is using, the company has a limited usage, or the company is using this asset. For example, have you purchased a bulb? Have you purchased a bulb or a projector? You understand projector? That projector you must have seen in your client place, in your office, in your coaching center.
Yes, sir.
Right?
Sir.
Projector. Let's go to buy a projector. Don't buy. Let's go to the market and ask for a price of a projector and ask for a life of a projector. You know, the shopkeeper will tell you the life in the lamp hours. The shopkeeper will not tell you that this projector will run for 10 years, 5 years, 6 years. No. He will tell you this projector has a 30,000 lamp hours life. 30,000 lamp hours means if you will not use the projector for the next 1 year, right? So nothing. So there is no consumption of that projector, and because the life is 30,000 lamp hours, whenever you start using, it will give you 30,000 lamp hours of life. When you go and buy the bulb, just see the life of the bulb. It will tell you in the hours, in the lamp hours, okay? Not in 1 year, 2 year, 5 years. So friends, there are few machineries like aircraft flying hours, ship sailing hours, right? So if the asset life is depending on the usage, right? In that case, the best appropriate method is on the basis of usage, because when you are expecting the future economic benefit, when you use the asset, आप जब एसेट को यूज करोगे तभी फ्यूचर इकोनॉमिक बेनिफिट आएगा. आई एम अ टीचर, आई एम यूजिंग प्रोजेक्टर फॉर टीचिंग माय स्टूडेंट्स, फॉर रनिंग द स्लाइड्स. When I own the projector, then only I'll get the future economic benefit, and the life is also on the basis of the usage. So in that case, I have to charge depreciation on the basis of usage method only. Is that clear to all of you? Yes or no? So
Clear, sir.
are you clear on SLM, WDV, unit of production method?
Yes, sir.
Yes. Okay. Okay. So sir, can we apply any of these three methods? Answer is yes, you can apply any of these three methods, but the only thing is whatever method you have to apply, it has to be appropriate. Number two, it is in line with the expected future economic benefit trends. Okay. Sir, let's say today we are taking a SLM method. Tomorrow, after 1 year, I want to, because when I purchased the machinery, I found that this machine will give a kind of a consistent future economic benefit. But after 1 year with the performance, I found that, and I realized that this machine has a reducing economic trend. This machine has a reducing efficiencies. So now I am changing from SLM method to WDV method. Question number 1, sir, can I change? Answer is yes. Question number 2, sir, whether I have to, in case of this change in method, whether it is a change in accounting policy or it is a change in accounting estimate.
Change in estimate.
This will be considered, this change in method of depreciation will be considered as a change in accounting estimate. Sir, whether it will have a retrospective application or prospective application, it will have a prospective application. Change in accounting policy has to be applied retrospective, but change in estimate has to be applied prospective. It has a prospective application, right? Prospective ka matlab, whatever is the WDV, opening value, divide by remaining life, right? It will give you the depreciation for that year. Okay. So friends, change in useful life, change in depreciation method, change in residual value, these are the change in estimate. And this impact has to be applied prospectively. Let's discuss illustration number 8. Okay. An entity acquired an asset. This is from ICAI study material. An entity acquired an asset 3 years ago at a cost of rupees 5 million, 50 lakh. 3 साल पहले. The depreciation method adopted for the asset was 10% WDV. इसका मतलब what was the depreciation in the first year? Please write down. 50 lakh cost of the asset 50 lakh less depreciation for first year 10% WDV, 10% of 50 lakh 5 lakh rupees. What is the depreciation for second year? If it is WDV, what is depreciation for second year?
4,50,000.
4,50,000. What is the WDV at the end of the second year? 40,50,000, right? 45 lakh minus 450, 40,50,000. What is the depreciation in the third year?
4,05,000.
4,05,000. Very good. Okay. So the depreciation method adopted for the asset was 10% reducing balance method. So Pooja, can you mute your audio? At the end of year 3, the entity estimates that the remaining useful life of the asset is 8 years and determined to adopt straight line method from that date so as to reflect the revised estimated pattern of recovery of economic benefit, right? So from WDV now it is shifting to SLM, right? So in the first year, year 1, the depreciation was 5 lakh. Year 2, depreciation was 450. Year 3, depreciation was 4,05,000. Now, whatever value is there, what is the closing value at the end of year 3? End of year 1, 50 lakh minus 5 lakh, 45 lakh. 45 minus 450,
lakhs.
40 lakh 50,000. 40, 50 minus 45, what is the value? 36 lakh?
45,000.
36 lakh 45,000 divided by 8. What is the value? Divide by 8. 4,55,000. Right? So friends, it has to be divided by 8. And from the year 4 to year 11, your depreciation will be 4,55,625. This is the computation. This working note should form part of your examination answer. Opening balance on the first year 50 lakh, depreciation 5 lakh, closing balance 45 lakh. Year 2, opening balance 45, depreciation 4.5, closing balance 40.50. Year 3, opening balance 40.50, depreciation 4.05, closing balance 36 lakh 45,000. Okay. Year 3 onwards, method of depreciation has been changed from reducing balance method to straight line method, for which it is assessed that the remaining useful life is 8 years. Hence, revised depreciation would be calculated as follows. Whatever is your carrying value, opening value divided by 8. 4,55,625 is the depreciation for the next 8 years. Depreciation for the next 8 years, right? Is that clear? Is that clear?
Yes, sir.
Friends, change in residual value and change in useful life, it is again a change in estimate. It has to be applied prospectively. Whatever is your carrying value, you have to divide that carrying value from the revised useful life or after taking an impact of revised residual value. So whatever depreciation come, it has to be prospective, not retrospective, right? Illustration number 12 from ICAI study material. Let's discuss this illustration. XYZ Limited purchased an asset on 1st January 2000 for rupees 1 lakh. And the asset had an estimated useful life of 10 years and residual value of nil. What is the depreciable amount in this case? Residual value is 0.
One lakh.
Yes, 1 lakh is 1 lakh is my depreciable amount. And what is the depreciation? If SLM method has to be used, what is the depreciation?
10,000.
10,000. The company had charged depreciation using the straight line method at 10,000 per annum. It is written in the question. On 1st January 2004, means after how many years? 31st December 2000, 31st December 2001, 2002, 2003. Okay, after how many years? 4 years. 1001, 2, 3. Okay, 4 years. On 1st January 2004, the management reviews the estimated life and decide that asset will probably be useful for a further 4 years. Means after 4 years, the management has evaluated that the remaining life is not 6 years, it is 4 years only. And therefore, the total life is revised to 8 years, the total life. How should the asset be accounted for remaining years? Ginny, what is your answer? Or Mamta, would you like to answer? Abrikesh, would you like to answer?
Yes, sir. Prospective.
Prospective means whatever is the opening value on the date of change of estimate, right? For example, what is the value on the 1st January 2004? If cost is 1 lakh and depreciation is 10,000 per annum, what is my value on 1st January
60,000,
2004?
sir.
60,000 is my value. 1 lakh minus 10,000 multiplied by 4, 60,000. Now this 60,000 has to be depreciated over the remaining 6
4
years or
years.
4 years?
4 years.
Remaining 4 years. So what is my prospective depreciation in the next 4 years?
15,000.
15,000 per annum. So in the first 4 years, 10,000 rupees per annum. In the next 4 years, 15,000 per annum. So in the first 4 years, 40,000. In the next 4 years, 60,000. The total cost is 1 lakh, right? So change in useful life of an asset is a change in estimate, which has to be applied prospectively. That is, depreciation charge will need to be recalculated. On 1st January 2004, when the asset net carrying value is 60,000, the company should amend the annual provision for depreciation to charge the unamortized cost, which is 60,000, over the remaining life of the asset, which is 4 years. Consequently, it should charge depreciation for the next 4 years at 15,000 per annum, right? Okay. So friends, we discussed with the help of example and 2 illustration, the impact of change in useful life, change in depreciation method, and change in residual value as well. Okay. So friends, please remember, change in depreciation method is always a change in accounting estimate. It is not a change in policy. Don't make this mistake in the examination, right? It is always a change in accounting estimate. Coming to the retirement and disposals, but changing from cost model to revaluation model. For example, on a particular class of asset in the first year, you have applied for cost model. In the next year, you have found that revaluation model is more suitable and you have applied a revaluation model in the next year, right? So tell me, this change in measurement model from cost to revaluation, whether it is change in policy or change in estimate?
Policy, sir.
Okay.
It is a change in policy. It is a change in policy. Sir, whether we have to apply retrospective, the standard has told you, while it is a change in accounting policy, but standard has given you exemption. For example, last year you have opted for a cost model, right? So cost minus depreciation minus impairment losses. This year you have done the fair valuation done. Okay. So it does not mean that you have to get the fair valuation for last year also. The last year value is at cost price. This year is a fair valued price. Okay. So this is allowed. This is allowed. This is an exception to the retrospective application. Okay. Yes, Ginny, you have raised the hand.
Sir, actually, there was network problem on my part. Please explain once again for 5 to 7 minutes before.
So, Ginny, my request would be, so I can just explain in a summarized manner, but I cannot repeat this 5 to 7 minutes again because
Yes,
I have
sir.
to cover a lot of things. So, Ginny, what I have covered that whenever there is a change in depreciation method, change in useful life, change in residual value, it is
Yes.
a change in accounting estimate and it has to be applied prospectively. Means whatever is the WDV, you have to apply that WDV for computing depreciation. You have to recalculate the depreciation by using that WDV divided by the revised useful life, or considering the revised depreciation method, or after considering the revised residual value. So whatever depreciation will come, this will be prospective. And Ginny, not to worry, the beauty of the online classes is these classes are recorded. You can again listen these classes on YouTube, right?
Yes, sir. Actually, you have maybe asked me the question and I could
No
not
problem.
answer
No problem.
because
No
of that
problem.
problem.
No problem. No problem. So
Thank
friends, now we have reached to the derecognition. You know, we discussed the birth of the asset, recognition. Then we discussed the measurement, right? We talked about the cost of the asset, right? We talked about the depreciation. We talked about the subsequent measurement. Now we have reached to a stage where now the asset is going to be discarded, disposed of, derecognized. Standard says that the carrying amount of an item of PPE shall be derecognized. It shall be derecognized, right? On disposal, you are actually selling out the asset. You are actually selling out the asset, right? Of course, you have to credit the asset and you have to debit. If you are getting the money, bank account debit to asset, then whatever is the profit or loss, it will go to your P&L, right? It is not a revenue. It is not a revenue. Now you guys have understood what is meant by revenue from operation, what is other income. You understood that? So whenever there is a loss or profit, it is no more a revenue, it is a other income, other expenses. So one, you have to derecognize your PP on disposal when you're actually derecognized. Number two, you have to derecognize your PP when no future economic benefit are expected. You have purchased a PP, you are using that PP, the life is 10 years. You have used only for 4 years. But now the government has banned the output from that PPE. It is no more a PPE, right? Because no future benefit is expected. Okay. So friends, the carrying amount of the PPE shall be derecognized on disposal or when no future economic benefit are expected from the use or disposal. Sir, what we will do in this case? We will impair that PPE, we will charge the impairment loss. So whatever is the amount of gain or loss, which is difference between the net disposal proceeds and the carrying amount of the asset, right? That net profit or loss will be recognized in the P&L and it should not be the revenue. It is your other expenses or other income. Okay. Friends, so today we have started with the revision of the day one. Then we have discussed what? The concept of exchange of assets, where we have discussed in case of exchange of the asset, the cost of the new asset is equal to the fair value, either asset acquired or asset given up, whichever is the more identifiable. Then we have discussed if both the fair values are given, we have to take the fair value of the asset given up, asset surrender. Okay. If both the fair values are not given, in that case, we have to take the cost of the new asset is equal to the WDV of the asset surrender, right? If the transaction does not have a commercial substance, the exchange is between the similar nature of asset, which is having a similar use in an entity's operation. In that case, fair value is not required to be determined. In that case, you have to measure the asset acquired at a WDV of the asset given, right? Then we discussed there are two measurement model at the subsequent measurement. Subsequent measurement means at reporting date, cost model and revaluation model. In cost model, your gross block is always same. You have to reduce depreciation and you have to reduce impairment losses for arriving at the carrying value. What is the revaluation model? It's a fair value. You have to compute the fair value on the reporting date. That fair value will become the value of the asset. Okay. And when you need to arrive at a carrying value, because it is not necessary to compute fair value at every reporting date. Okay. if your prices are volatile, if the price of the asset is volatile, for example, it is a building and the prices are highly volatile, it is increasing and decreasing day by day. So in that case, every year fair value is required, but otherwise fair value is required to be obtained in the frequency of 3 to 5 years. So for example, today you have arrived at fair value. Tomorrow, after 1 year, you are not required to compute fair value because there are no major movement. In that case, whatever was the fair value, revalued amount, minus subsequent depreciation, minus subsequent impairment losses, if any, will become your carrying value. So whenever you arrive at a revalued amount, for computing depreciation, you have to divide your revalued amount by revised useful life. Okay. So friends, then we discussed the concept of depreciation, the 3 methods of depreciation. We have also discussed in revaluation model, whenever there is a revaluation increase, revaluation reserve will be created and it will go to OCI. But first time, whenever there is a decrease, we have to take it to the P&L. For example, first time there was an increase and then decrease. In that case, you have to reverse your revaluation surplus to the extent this revaluation surplus was there. Okay. And if that decrease is beyond increase, so the excess part should go to the P&L. Likewise, if there is a decrease first, it has to go to P&L. If there is an increase subsequent, so to the extent of earlier decrease, this subsequent increase needs to be taken to P&L. Beyond that, it has to go to OCI. If you have a revaluation surplus, this revaluation surplus can be utilized in 2 ways. Number 1, revaluation surplus can be transferred to retained earning at the time of derecognition, or revaluation surplus can be transferred to retained earning during the lifetime of the asset also, to the extent of extra depreciation due to revaluation, right? Then we talked 3 methods of depreciation: SLM, WDV, and unit of production method. These 3 methods depends on the future economic benefit which is expected from that asset, right? And friends, whenever there is a change in depreciation method, it will be taken as a change in accounting estimate and has to be applied prospectively. Friends, there could be a change in depreciation method, change in useful life, change in residual value. All these 3 are change in estimate and it has to be applied prospectively. Friends, one important point which I forgot to tell you, that it is mandatory to review the useful life and the residual value every 1 year at the point of every year end, right? Useful life and residual value are required to be reviewed at every year end. Okay, this is important. Okay. So practically the companies are reviewing their useful life residual value at the end of every year, while there is no change largely, but for the sake of their accounting policy, they are saying that, you know, we are reviewing our useful life and residual value at the end of every year. Yes.
सर आपने भी कहा था कि पॉलिसी चेंज अगर करेंगे तो रेट्रोस्पेक्टिवली
Yes,
इम्पैक्ट
yes,
राइट?
yes.
तो शेयर वन एग्जांपल जो उसके जिसके अंदर हम रेट्रोस्पेक्टिवली एग्जाम करके और उसको चेंज करके देखेंगे या
So
फिर उसका
Monica, what happens? You remember I have covered Ind AS 8 also. So Ind AS 8 says that whenever there is a change in accounting policy, you have to apply it retrospective. For example, grant, government grant, right? And the practical example you can take from ONGC. Have I seen the ONGC financial statement, annual report in that class? So ONGC has changed the accounting policy of government grant. Like when you read government grant standard, you will find that government grant can be the asset, the non-monetary asset which has been taken as a government grant. It can be fair valued as well as it can be taken at nominal price. There are 2 accounting policy, right? So whenever, if a company changing the policy of government grant, it has to be applied retrospectively. For example, from nominal value, the company has reached to fair value. So last year का भी fair value करना पड़ेगा company को. It is retrospective. But from a change from cost model to revaluation model, standard says that while it is a change in accounting policy, but retrospective application is not required. So this is an exception which is given here. Okay.
Okay, sir. Thank you.
Now we'll quickly do some MCQs to check your understanding. You have to write answer A, B, C, D, 1, 2, 3, 4, whatever in your portal, so that I will be able to know, are you able to understand or not so far? So the first question is, change in depreciation method is a change in accounting policy, accounting estimate, accounting method, accounting standard. What is the right answer? A, B, C, D. What is the right answer?
Option B.
So most of the students have given the right answer. Even all the students have given the right answer. It's a option B, change in accounting estimate. Yes, it's a change in accounting estimate. Question number 2. When an asset is sold or disposed of, where is the gain or loss recognized? Asset disposal account, profit and loss, revaluation reserve, depreciation. What is the right answer?
Profit or loss account.
Again, option B, profit and loss account. Sir, सबका आंसर option B होता है. Let's see. Under Ind AS 16, how often should the useful life of an asset be reviewed? How often? At least at each financial year end, every 6 months, management discretion, never.
Option A.
Option A. Now the option has been changed. It is no more option B. Option A, at least at each financial year end, right? The depreciation method applied to an asset shall be reviewed at each financial year end. Even the useful life, residual value, depreciation method, this has to be reviewed. How should an item of PP be initially recognized in the financial statement? Market value, cost, NRV, fair value, initial recognition.
At cost, option B.
Option B. Sir, फिर से option B आ गया. Option B. Okay. Question number 5. If one large asset has a number of individual component with different useful life, अगर life same है तो उसको separate करने की जरूरत नहीं है, right? For example, if a large asset has a multiple significant component but useful life is same, then you are not required to split the component. But if one large asset has a number of individual components with different useful life, how should this be depreciated? Treat as one asset, break down into different component, expense it all, treat as one asset but disclose in the notes to financials.
Option B again.
Again, option B, break down into different components. Okay. Under Ind AS 16, which two subsequent accounting treatment are allowed subsequent to initial recognition? Cost model, present value, cost model, revaluation model, fair value, revaluation, fair value, cost model.
Option C.
B, sir. Cost model and revaluation model.
Yes, cost model and revaluation model. ये तो कितनी बार बोल चुका हूं मैं आज की क्लास में. Cost model, revaluation model, cost model, revaluation model. The model is revaluation model. And it was there in accounting standard also. AS 10 में भी यही था. When it is dash, that future economic benefit associated with an asset will flow to the entity and the cost can be dash measured, it should be recognized as an asset. What is the right answer?
Option C.
Option C. When it is probable and cost can be reliably measured. Yes, option C is the right answer. Question number 8. Which of the following is not an asset that falls under the scope of Ind AS 16? You remember scope part I have covered as a theory. Tangible asset. Will it be covered under the scope of Ind AS 16? Yes.
Yes, sir.
Which is not covered? Asset held for the
Option
production or
C.
supply of goods and services. It is covered. Assets held still in the normal course of business.
It's inventory.
It's an inventory. C is the answer. C is not a PP. C is an inventory. When the revaluation model is used for PP, the gain or loss should be included in where income for the period, gain from revaluation on the income statement, a revaluation surplus account in OCI, extraordinary gain or loss in the income statement. Which is the right answer?
Option C.
Revaluation surplus account.
Revaluation surplus account. Option C. Which of these is an allowable cost of an asset under Ind AS 16? Which of these is allowable cost? Professional fees, general overheads, initial operating losses, administration expenses.
C.
इसमें से कौन सा
Initial
capitalize हो सकता
operating
है?
losses.
Allowable cost.
C.
A is the right answer. General overheads, initial operating losses, administration expenses are not allowed to be capitalized. आपने एक factory start की. You have started a factory. You have the initial operating losses in the factory. शुरू में तो losses होंगे ना, revenue कम होगा. Can you capitalize those losses into the cost of the asset? The asset is already available for use. Right? So friends, general overheads, of course, administrative and general overheads are not required to be capitalized. It is not allowable directly attributable cost. Initial operating losses, not directly allowable cost. Administration expenses, not directly allowable cost. Professional fees, you can capitalize if it is directly attributable cost. Now, this is your favorite slide. Friends, it's 10:05 now. Thank you so much. So Ginny, if you have any questions, so I'll quickly reply to that and then I'll conclude the session. Yes,
Sir,
Ginny.
on BOS portal regarding Ind AS 115, only PDF is uploaded. Please upload, sir, Excel sheet also.
I have shared the Excel sheet also. So Ajit ji, if you are there, Ajit ji, आप Excel sheet भी upload करा दीजिए. मैं Excel sheet भी share कर चुका हूँ. Right?
Okay, sir. Thank you, sir.
Okay. Thank you so much. Thank you, students.
Sir,
Yes. Who's there?
sir, it said that whenever there is asset derecognition and if there is gain or loss, we take it in P&L. But one line has been mentioned in the module where it says that gain shall not be classified as revenue. Then when, how to
Other income.
classify?
Other income. Other income. I told. So Ginny, that part you have missed. Actually, there was a network problem at that point of time, I believe. So whenever there is a gain, it has to be taken to the other income. It is not a revenue from operations, right? Hello? Am I clear on this, Ginny? So who
Yes,
has
sir,
asked this
clear.
question?
It's Pooja, sir.
Okay, okay, sorry.
Okay, sir.
Yeah. Okay, thank you.
Thank you, sir.
Thank you so much. Bye-bye. Take care.
Thank you, sir.
Yeah, session is over. Thank you, Ashok ji. Thank you. Thank you.